Welcome, welcome, welcome. In honor of our guest today, I will say hello, dear friends. Keith, how are you today?
Today's the best day of my life. Ben, how you doing?
Me too. We have an awesome guest here who I've watched so many of his videos, so I'm so excited to pick his brain in person. So Keith, I'll let you introduce our awesome guest.
Yeah, well, we have Clive Thompson with us. Clive, I was checking some of the data in my YouTube, and I was looking at who my audience watches, and you're always one of the top people in there. So it's awesome to have you here. I think a lot of people are gonna be excited for this conversation. But if you will tell people just a brief intro to your background.
Sure. So I worked in wealth management for 47 years in Switzerland mostly. Retired 3 years ago. Never ever planned to be on YouTube. It wasn't even a remote dream. So that kind of happened by accident. And yeah, here I am on YouTube talking about investments, gold, silver, Bitcoin, property, anything you like.
So cool. So cool. What was it that made you decide to get on YouTube?
I wrote an art. I was a regular writer on LinkedIn. I mean, the funny thing was, when I was working, I was never on LinkedIn. LinkedIn is obviously meant for people who are looking for jobs. But when I retired, I thought maybe it's a good idea to go on the board of directors of some big companies and be a non-executive director, because, nice easy way to get paid a lot of money for doing nothing. I kind of fancy that. So I thought, well, I'm not going to get that type of role unless I do a LinkedIn profile. So I did a LinkedIn profile, and then I saw that people were writing articles on LinkedIn. I thought, well, I can write too. So I wrote a lot of articles. My numbers went from 0 to 10,000 in almost no time at all in terms of followers. And then someone saw an article of mine about the Federal Reserve being insolvent, invited me on their channel. We ended up talking not so much about the Federal Reserve, but about what's called the global currency reset, which was the words I used. He'd never heard those words before. That video went viral. It got 600,000 views for a channel which was normally getting 10,000 views. So I got invited onto a lot of other people's channels. And after a couple of years of being invited, I thought, well, perhaps I should just try it myself and see how it works.
Love that.
So
definitely worked out.
I set up the YouTube channel Clive Thompson about 9 months ago, I'd say, and I've gone to 100,000 views, 100,000 subscribers now.
That's remarkable. Amazing. That's cool. So good to see. And I love when diverse perspectives come to YouTube, because I've been making YouTube content for nearly a decade. So I've loved the recent push for like authenticity, different perspectives. And I think that both you and Keith fall into that perspective of not overly done things, just good information and honest perspectives. And so I'm really glad to have you on YouTube and super amped to have you here today. Keith, where do you think we should start with this one?
I think one of the easiest ways to start this off is to just play a quick clip from what Jerome Powell said at the FOMC meeting yesterday.
Yeah, that made me laugh. Go ahead.
Always does.
Significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made it's without losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
What are your initial reactions to that, Clive?
Well, it's the exact opposite words of Alan Greenspan, who looked at gold and said, if the gold price is up, we're in trouble. We've got to do something about it. And if it's down, everything's hunky-dory. He's basically saying, I don't want to put words in his mouth that he didn't actually say, but he might as well have stuck two fingers up at the journalist. How can the head of the Federal Reserve say we don't care about the gold price? I mean, it's sending a signal, isn't it?
Yeah, it's almost hard to take anything that is said in those meetings with any degree of like validity, because it's almost like there's like paradox after paradox. It doesn't really make much sense. But Keith, did you have any other clips that you wanted to show?
I don't know if I have a clip for this one, but there was also a moment where he was being asked about the fall of the dollar and how maybe that might be perceived by the Fed, and he kind of avoided it. He was like, that's the Treasury's job. and things like that. What do you think of that, Clive?
Well, look, the Federal Reserve makes dollars. You know, if you get a banknote, it's got obviously it's written made by the Federal Reserve or something like that on it. How can he not care about the value of the dollar? It makes no sense at all. I mean, the Federal Reserve's job, I know they officially it's to keep inflation down and full employment, but if you are the printer of the country's currency, you've got to care about what it's worth. Not say, I don't care, it doesn't matter, it's irrelevant. It's not our, what did he say? It's not our job. I think he said not our job or something like that. It's the Treasury's job.
Definitely. Yeah, and you've made a video about the potential revaluing of the price of gold, and the price target that you had put in your video, I think, was $15,000. And you had said the two biggest signs would be rapidly rising gold prices and a declining dollar, which are things that I think that we're at least at the beginning of experiencing for sure.
So yeah, I mean, this was a video I did maybe 5 or 6 months ago.
Yes.
Where I said at some point we'll know we're potentially getting towards the end game when you start to see asset prices, in particular gold, rising rapidly. And the reason I put a $15,000 price on gold was not because I think we climbed to it, but rather I think there's the price of 15,000 will be engineered, and that's my number. And I know a lot of people want a much higher number, but my number, it'll be engineered by the Treasury, because by revaluing their gold reserves at that kind of level and doing a bit of financial jiggery-pokery, which I explained in the video, they will be able to effectively repay several $1 trillion of US debt, kicking the can down the road for a couple of years. In other words, allowing the system that we know it to last a little bit longer. And then, of course, in a couple of years, they can do the same trick again. But I won't go into the details of how it works. But basically, if you take the gold, revalue it, you can actually reduce your debt and keep the gold.
And could you explain a little bit for people who would have no idea how that could possibly happen?
Sure, I will do. So the way that would happen, it all dates back to the 1934, when the US Treasury effectively nabbed all the gold which was owned by the Federal Reserve. They passed a law basically saying the Federal Reserve will sell all its gold to the Treasury at $20.67 ounces, $20.67 an ounce. And in exchange, the Federal Reserve will get what's called gold notes, which are not actually redeemable in gold ever. They're redeemable in paper, and that's it. And at the face value. Now, the very next day, I think it was, after the Fed had sold their gold to the Treasury, perhaps rather unwillingly, the Treasury decided to revalue gold at $35 an ounce, creating a massive profit for the Treasury at the expense of the Federal Reserve, and much to the annoyance of all the Americans who'd handed in their gold at $20 an ounce, when they could have had $35 if they'd been allowed to hang on to it for another year. So that's sort of the backdrop. So as we stand today, the Federal Reserve has got these gold notes, which I think is about $12 billion at the official price now, $42.22. It might be $13 billion, but it's something like that. Now, that's the Federal Reserve. The Treasury has got the gold, which would be worth several $1 trillion at 15,000. I haven't got the figure, but let's call it 3 trillion, for example. I think that's roughly the figure. What the Federal Reserve now, what the Treasury now needs to do is redeem those gold notes from the Federal Reserve at face value, give the Federal Reserve their $12 billion back in cash. Then they will sell the gold that they have to the Federal Reserve for $3 trillion. They'll get $3 trillion of cash in hand, but they don't have the gold. And then they'll immediately buy back the gold with new gold notes from the Federal Reserve. So they'll get the gold back, and they'll have issued in exchange those gold notes, which now become the property of the Federal Reserve. Now, the beauty of the gold notes is that they are perpetual, they're never redeemable, and they bear no interest, and they're not part of the national debt. So suddenly the US government's got, the Treasury's got $3 trillion in hand, which you can use to reduce the national debt, to some extent, not a big reduction, it's 10% reduction, not even 10%, but it would help. They've got this, they reduced national debt and they've kept their gold, and the only effectively loser, if you like, in the game is the Federal Reserve, who gets a lot of paper. But what does it matter? They had paper before, they got paper afterwards. Oh, where does the money come from to pay for the pay the treasury for the gold that the Fed bought? They just print it.
Keith, go ahead.
Nothing wrong with that. They've been printing for years. It's never done any harm. Let them carry on printing.
Yeah, it seems to work, huh?
Yeah, and Clive, you're based in Switzerland, is that correct?
That's correct, yes.
Okay. And did you spend any time in the United States working in finance, or kind of, yeah, how did that evolve, or how did you end up working your way into the industry that you're in now, or that you were in?
Well, the closest I ever got to the United States was the Cayman Islands, Grand Cayman, in fact, where my boss had about 25 banks in his drawer. One of the things everyone used to laugh about inside the Cayman Islands, they always used to say, the Cayman Islands has got more treasury bonds than any other country in the world, and euro bonds, and there's more banks than there are people in the islands. But of course, what they didn't realize that most of these banks were just nameplates on the door. And what would happen? Big banks from around the world, I'm talking very large, well-known banks, would have a branch in the Cayman Islands, which is basically a nameplate on the door and a file in your drawer. And what would happen? Once a month, these banks would send to the Cayman Islands the balance sheet for their Cayman Islands subsidiary. So the people in the Cayman Islands did nothing other than shadow accounting of what the balance sheet said. But these banks didn't really, at the time, have any physical staff in the Caymans. So that was the closest I came to the United States.
That's actually an awesome way to hear about that, because the real reason that I wanted to ask that was because I'm trying to think about there's different markets when it comes to gold and silver, right? And right now we're seeing a little bit of dislocation between the different markets. Could you talk a little bit about maybe if you have any experience with the futures market and like how some of that stuff works, and how there's a difference in different markets in the world and also in different types of markets for the metals, and like what's happening with that?
Yeah. So let's just start by talking about a standard futures market like COMEX. The way that works for the bullion banks is they can sell gold for a forward date, and in general, it trades in what's called contango. Now, contango means that the futures price in general is higher than the spot price. So by selling gold for, let's say, March this year, they'll get a higher price normally than the price of spot gold. All they have to do is wait until we get to March, and then they buy back the gold at spot and sell at the future again. So they're constantly rolling forward. And as they roll forward, they make an ongoing profit. And the profit is the difference between the futures price, which is higher, and the spot price where they buy it back. So they short the long, and as it gets to maturity, they close their future, buying it back, and sell another future, going another 3 months forward. And they can keep doing that ad infinitum and make an almost, well, it is in normal times a guaranteed profit. Where that would run into difficulty would be if we go into what's called backwardation, which is the opposite of contango. And backwardation is when the spot price that they have to buy back these futures contracts or buy back the when it arrives at maturity is higher than the futures price. Now, at that point, they're starting to make a loss because they're buying something for more than they paid for it, which is obviously going to cause them losses. And that's how a normal futures market. Where we've got to now is a dislocation between the various markets. If you go into a coin shop and try and buy some gold today, they'll be quoting you a much higher price over the gold price than they usually do. And if you try to sell it, they'll be quoting you a much lower price than the usual gold price than they usually do, because the gold dealers literally do not know where the price is going to be tomorrow. It might be up 5%, it might be up 10%, it might be down 10%, and they have to protect themselves. So we've already got this dislocation going on between the physical market on the street. I mean, if I want to go buy gold, I'm not going to get it for the 5,000 something that you see on the screen today. I'm going to have to pay a lot more than that. Now, silver has gone into a much more extreme situation where we've got the price of silver in Shanghai trading at an absolutely massive premium over the price in COMEX. And the reason for that seems to be that the usual shipping of silver to China from America to China when there's a dislocation of the price isn't happening. Now, we don't know the reason it's not happening. Maybe the usual bullion banks who would do that arbitrage can't lay their hands on the silver in New York for some reason, or maybe the shipping companies which would ship it are all booked up. So I don't know the reason, but we have now effectively 3 prices or 4 prices in the world: the dealer prices where they buy, dealer prices where they sell, the COMEX price, and then the Shanghai price. It's all over the place.
Thank you for explaining that. Someone asked in the chat too, they said, ask Clive about how does shorting work? And, we've seen a lot of rumors about potentially banks shorting silver and gold. And then there was a rumor that some big bank like blew up, and then the Fed tried to save them in the United States. Did you hear anything about that? And then could you briefly explain a little bit of how shorting works?
Yes. So the story about a big bank blowing up was a lie by an artificial intelligence robot who was producing videos for the purpose of views. If you read the small print under that video, and very small print and hidden away where nobody would see it, you would have discovered that they do say this is fiction. But they told the story as if it was fact. And unfortunately, unfortunately, many people who don't know how to read repeated the story as if it was fact, because they think that everything they hear what was just unbelievable that you've got a robot saying, I've been following the price of gold for 25 years or something like that. No, a robot. This is like an AI robot says he's been following for 25 years. No, it just makes no sense. So everything in that story about a big bank blowing up was complete rubbish. But the worst part of it was I saw at least one newspaper grab that story and print it as it was a Swiss newspaper, funnily enough, printed as if it was fact. And they did say, in the small print, these are allegations, but
yeah, the damage is done.
Yeah, I mean, that was really bad. So what is shorting? And so this bank is not short. I mean, maybe they've got a little bit of short, but they manage their risks very well. I won't say the name of the bank because I don't want to throw any petrol on the fire. But when a bank goes short, they're basically doing what I say. They are selling the future contract, expecting to make a profit by the time it reaches maturity, because the price goes down. The future price is generally higher than the spot price. And it's a kind of way of making free money until you have to buy it back for more than you sold it for, and then you've got a problem. Now, generally, to protect themselves, they keep gold or silver somewhere. But that gold or silver might not be in the right shape or form for good delivery. So from a financial point of view, they're probably, if they're going short here, they're short here, they're long over here, but it might not be possible to deliver this one into that one because you've got it in COMEX, you've got to have a certain size bar, it's got to be registered, it's got to be, a lot of things got to be just right, it's got to be exactly the right shape and size. So if their gold is not in the right place or not in the right shape, in normal times, the option would be to move one asset into the other. But if the markets are in a disrupted state, it might not be possible to do that, because you might find the smelters can't change the size of your bar to an acceptable size bar. And therefore, you're stuck with a panic situation where you can't, as you haven't got anything which is allowed to be delivered, even though you've got the same thing, but it's the wrong weight. You have to now buy at market, irrespective of the price, to cover your short.
Fascinating.
Totally. And, I feel like people want to believe that story, right? They want to hear that there's some big bank in the markets manipulating prices and keeping them from getting rich, quite frankly. And there have been some times in the past where there was an official story. I believe it was the Hunt brothers in the 80s or something like that. Are you familiar with that story at all? And does that?
Sure. Yeah,
Yeah.
I've read the book. I've read the book Silver Bulls, which was about the Hunt brothers and how they got screwed over by COMEX and the authorities. But the gist of it was they were trying to corner the market. When you corner the market, you try to buy up everything in the market so that those who want it can't get it, and therefore those who want it have to pay through the nose to get it. So they were trying to buy up all the silver, and to do that they took on. They were buying a lot of physical silver, but they also were buying futures contracts on COMEX. The trouble was the shorts, and at the time silver ran from about $1 to $50. Like, so we're talking about 50 times. So if you imagine someone was short at $1 or $2, and now they're having to buy it back at $50, they were in extreme loss positions. And all these big exchanges, they love the shorts, but the shorts are what makes the market. I mean, having someone go buy silver, they've got to have someone to buy it from, and the only place you can buy it from is someone who's shorting it, selling it. So the shorts make the liquidity in the market. So the exchanges love the shorts. So when things go wrong, they're more likely to protect the shorts than they are the longs, and that's exactly what happened in the Hunt brothers. They changed the rules. I think they brought in something called Silver Rule number 7. But the gist of the changes in rules were: one, the Hunts were prevented from using borrowed money to buy more silver, and secondly, the number of contracts which they were allowed to own when they rolled their positions was limited to a certain number of contracts. So let's say previously that you could buy an unlimited number of contracts. Now they said, sorry, you can't buy more than 100 or 1,000 contracts or whatever it was. So suddenly the Hunts found themselves with, let's say they had 5,000 contracts maturing, but they only had to buy 1,000 on the next series. They had no other choice than to liquidate their contracts at any price, because they weren't allowed to turn it into real silver, because that would have meant borrowing money, and they couldn't roll it to the next futures date, which was the original plan, because that wasn't allowed by the rules of COMEX. So basically they were screwed over and were forced to sell, which crashed the price of silver, and effectively ended up making them bankrupt.
Totally. Ben, did you have something?
Yeah, there's a question from the chat, because with all of this discussion, there's more and more people that are interested in buying precious metals like gold, and then also silver, and then copper. I'm hearing questions about as well in the chat. As an individual, where do you recommend buying metals? Like, where should an individual go to buy gold? Is there a right way? Is there a wrong way?
Well, if let's start with silver, because I think there's a bit of an opportunity for those who want to get silver at the moment. There are many precious metal dealers who have been overwhelmed with sell orders, and the refineries are backed up, so they're not in a position to lay off their risk with the refineries by passing on the silver they bought to the refineries. So that literally, when people are walking in the shop now, they're saying, "We'll give you. You want to sell some silver? We'll give you $20 below." Massive. So the opportunity here is to ring around and see if they'll let you take some of that off their hands at maybe $6 below the silver price or $10 below the silver price. I think in many cases, they'd be very, very happy to get rid of it so they can accommodate all the people are coming in the door, because they've only got so much money. If you've only got $1 million, once you've bought $1 million of silver, unless you can pass that on to the refinery, you're stuck. You can't buy any more. You've got no money. So to make money, you've got to unload some of that silver. The only way they can unload it is by selling it below spot. So I think if you try your luck on silver, you could ring around some silver shops and see if any of them will sell you at a decent discount, and I'll bet you the answer is yes. I mean, I've heard some of them say yes, so I'll bet you the answer is yes, and you might be able to pick it up below spot at the moment. But by the same token, there'll be many silver dealers who will want to charge you $20 more than spot, because they've got their inventories going the other way and they're running out of it. It just depends on the country, the town, the village, the sentiment. Things are all over the place at the moment. On gold, I think it's going to be a lot closer to the gold price, whether you're a buyer or a seller, because there doesn't seem to be any particular problem in the gold market at the moment, other than everybody has suddenly decided, and for good reason, that they better get some while they still can get some. I think what's going on with the gold market now is it's a different kettle of fish from the silver market, but what's going on is, up until a couple of years ago, people kind of saw gold as steady as you go and inflation hedge asset. If I want to hedge myself against inflation, I can buy some gold. It won't pay me any dividends, it won't pay me any interest, but probably in 10 years' time, it will still buy me what I the same as I paid for it now. That's how it was viewed. But that attitude is changing now, because people can see that things are going potentially wrong with the levels of government debt and geopolitics. And they're starting to say, I don't know what's coming, but I think I don't really care about inflation anymore. I'm not looking at inflation of gold. I think I'll get some gold now because I don't know what's coming, and that I'm going to front run what might happen next week, next month, next year, and I'd rather be ahead of the curve and get it while I still can, and get it before everybody else. Because the minute everybody else realizes what I've realized, that's what they're thinking. They've realized that this government debt is unsustainable. Something's going to happen. And they say, well, the rest of the world hasn't woken up to it, but I've woken up to it. I better get my gold while I still can, before everybody else wakes up, because it's going to be a lot higher. So that's basically, I think, what's happening. People are front running it. It's not just individuals. It will be central banks as well. Although it's very hard to get the evidence for that, because the statistics and the reporting by central banks is very long delayed by the central banks themselves. And there's lots of central banks who don't report at all.
Quick note on that, I'll share a tweet that I saw from the Kobasi letter, I believe it was earlier today. Breaking gold has officially overtaken U.S. Treasuries in central bank FX reserves for the first time in at least 20 years. So essentially the global gold holdings are at 5 trillion, surpassing the foreign official treasury holdings of 3.9 trillion, with gold holdings have tripled since Q4 2019. So even with any potential delays, right, that we may be seeing in how central banks are acquiring and whatnot with gold, one thing for sure that we can see is that, well, the amount of gold that they're holding versus FX reserves is obviously going up versus U.S. Treasuries in their FX reserves. And then also in general, we've seen a huge uptick in the amount of central bank buying, right? Buying even over the past year, where prices have almost doubled before even all of the super crazy mania that we're just now starting to step into. So I just wanted to point that out a bit. Any initial thoughts on that?
Yeah, well, the Chinese central bank is in there every month buying a little bit of gold. I mean, I won't say it's huge amounts, but they're a steady buyer. They don't care about the price. The gold in the Chinese central bank reserves, foreign exchange reserves, is rising as a percentage of their overall holdings, partly because they're buying more and partly because the price is going up. So what they're doing is, I think it's, I haven't got the figures in front of me, but a year or two ago, I think it was like 3% of the reserves. I think it's probably about 6% now. That's not a precise figure, but it's certainly a lot more when I last looked. So I think what's going on with the Chinese, they're allowing the generalized rise in the gold price plus their purchases to constitute a larger percentage of their reserves, whilst at the same time not making a great deal of effort to increase their holdings of treasuries.
Fair enough. And then one of the things that people are thinking about as far as how to get involved in all of this is paper versus the actual physical metals. That's a huge question that I've been seeing coming up. And can you describe like the difference between like paper, having metals on paper versus having it physically, and how you look at that as an investor?
Well, first of all, a lot of the people I talk to have got sufficiently large amounts of money that they couldn't possibly keep the metal at home, or shouldn't keep it at home. We're talking about many millions in many cases. So you own, for your parachute, for your emergency money, your lifeboat, you only need a certain amount where you can get your hands on it quickly and easily. That could be in your home, buried in your garden, or a very safe location somewhere where you can get to quickly. For the rest, you need it locked up. If it's physical, you need it locked up in a very safe place underground in a strong, a very strong vaulted bank. But that type of gold is the type of gold you should never be planning to sell. You should be planning to keep it forever, pass it down the generations, just like a painting or a work of art or the family castle. Those are the things. The gold physical is what you don't sell. You hang on to forever. If you plan to sell it, you shouldn't be buying physical. Because if you have a plan, I'm buying it today and it'll be higher tomorrow, I'm going to sell it tomorrow, then you want to be buying the paper. Of course, it's not real gold, okay? It's not a parachute, it's not a lifeboat. It won't save. If there's a panic, it won't save you, because you might have all kinds of difficulty. But all these exchange traded funds have what's called force majeure clauses, under which, if it's not their fault, for whatever reason, they don't have to give you the gold back. So, you can imagine in certain types of situations, and those situations, by the way, are outlined in the prospectuses of all these ETFs. I know there's all kinds of things, like war, civil unrest, transport difficulties, supply chains, taxes, government decree. There's everything under the sun you could possibly think of as an excuse why they might not give it back to you. And of course, you can only get it back if you have a certain amount, like $1 million or whatever the cutoff point is, because you can change your shares for physical metal if you qualify in certain ways, and most people wouldn't qualify, so that's not really an issue. But if you're thinking of buying today and selling next week or next month or next year, then the paper is the way to go, because when you're buying paper, there's a very narrow spread between the bid and ask. It's like 0.25% or 0.1%. You pay a very small commission to the bank or broker when you buy it and sell it. And of course, it's nice and convenient, because with a flick of a button on your mouse, you can sell it in a microsecond. Whereas trying to sell physical coins, you'd have to walk to the dealer somewhere, and then he's going to screw you over on the bid and ask price when you do that. But if you're buying physical, you shouldn't care about the price. You should say, it doesn't matter if you pay 20 or 30% more than the price. That's irrelevant. That's not, that's neither here nor there. What you're buying is you're buying yourself a lifeboat. You're buying yourself some insurance. You're buying yourself some protection if everything else starts to go wrong. I mean, if you look at the Weimar inflation in Germany, then negotiable things like gold became relatively far more valuable than things which were hard to negotiate, like houses. So it got to the point where you could buy a house for just a couple of gold coins, because people couldn't use their house to eat, but if they had gold coins, then they could negotiate those into other stuff to eat.
Very well said.
So in a disaster situation, you wouldn't really care whether you'd overpaid, underpaid. You don't care. It doesn't matter. You just have to have it. It's like having your health insurance. When you need it, you're really glad you had it, and it doesn't matter that it was expensive or not. You've got it, thank God, as opposed to having none.
I think a lot of people, where they really struggle with all these things, is because they haven't experienced it themselves. They think that these things just can't happen because they haven't happened while they were alive. What I love about a lot of your videos is you go back throughout history when a lot of currencies collapsed or there was a reset. Could you walk us through the concept of the currency reset, how it happens, why it happens, and when it's happened in history?
Quite often these things have gone quite slowly, as in the Roman Empire, when it took something like 300 years for the silver content of the denarius to be debased from 99% to 0%, effectively, little by little. Those emperors who debased a little bit too much ended up with very unhappy armies, because the soldiers became disgruntled that their pay was not buying as much. And it's a very dangerous thing to have unhappy soldiers. And so many of those emperors met very sticky and painful ends. I think more than half of them did.
Wow.
But the few which restored money in a sound way managed to survive sometimes 10 or 15 years and die of nice things like old age. well, I mean, I don't think old age was a thing back then, but you know what I mean. It was some disease or something. But that was the Roman Empire. But of course, then we've had situations where the money has basically lost its value almost overnight, like the former Yugoslavia. In that situation, the value of currency was halving every day and a half. So literally, the day you get paid every day, the day you got paid, you'd have to rush out and buy anything. Doesn't matter whether you needed or not. You bought anything you could with the money, and if you could lay your hands on Deutschmarks, so much the better.
So, what is the process of how a currency reset can happen? Like, what are the steps and the warning signs?
Well, the warning that it's coming is when everybody is rushing to buy anything, whether it be razor blades or toilet rolls. Or in this case, silver and gold. But you know, when people fear, when people are afraid that something is going wrong, and there could be a war, it could be civil unrest, it could be supply chain disruption, it could be a pandemic, it could be a natural disaster. You don't know. Things can happen without warning. It could be a currency crisis. It could be a bond crisis. Suddenly, the government can't finance itself, and then how they're going to spend money if they can't borrow any money. There's all kinds of things could happen. We don't know what it would be, but the warning signs are usually ahead of that in terms of prices rising. And I think the earliest warning signs are typically gold and silver. So we are seeing, as of today, the earliest warning signs, which tells us not that it's tomorrow or next week or next month or next year. We don't know that. It could still be many, many years away before we have a currency reset, or it might be tomorrow. You don't know. It just depends on what tomorrow's news is, and that nobody can tell you. So I'm not going to tell you a time scale, but I don't think the currencies we have on this planet will be here in 10 years. I think they'll be gone and replaced by something else. Now, I'm going to give you a couple of scenarios which have happened around the world and might happen again. Of course, one of the most common scenarios is a generally rising level of inflation until you get to a hyperinflation situation where basically they start issuing new color notes with lots of zeros knocked off. That would be a very common type of situation. And it's the preferred solution by many governments to basically inflate their way out of it, because all the other solutions are very painful, or seem to be very painful at first sight. But we've seen around the world what's called the bail-in. That's when anyone who's got money in the bank, I think Brazil was where this happened, is forced to lend it to the government on the government's terms, i.e. a low interest rate for a number of years with the promise they'll get it back. But by the time they get it back, it doesn't buy anything because of the inflation. Another example is where they basically cap you. We saw that in Cyprus, for example, recently, a few years ago. So basically, anyone with more than 100,000 euros, bad luck, it's gone. It now belongs to the National Bank of Greece, because otherwise all the banks would have been bust. We also saw it in a certain sense with the Greek bonds, the Greek national debts. I'm personally a victim of that. Now, it's not that I didn't buy Greek debt knowing that it was likely to default. I mean, I expected that. Everybody who bought Greek debt expected it to default. The question was, what do you expect to get back? What I never expected, and what nobody expected, was that the European Union, the ECB, would force the Greeks to change the law so the normal rules of pari passu, which apply when you bought the bond, would no longer apply, and they put in place a rule which said anybody who's got 30%, i.e. us, can vote what we like. And oh yes, we vote that we get 100%, and everybody else, like Clive Thompson, can go whistle.
Wow.
So you know, I don't care. I'm very diversified. It's one of many things, and you expect to lose money on some things, but I didn't expect to lose money because of unfair behavior by the central bank. Of course, this went to court and was heard by the highest court, the European courts, because the richest investors wanted a compensation, like the hedge funds, and the courts basically said we realize that the man in the street has been cheated out of his money, but saving the European monetary system had a higher priority than saving Joe Bloggs.
And when was this again, did you say?
This would be 2011, perhaps.
Gotcha. Incredible. So one of the things that you kind of pointed out, I think requires kind of everything, hyperinflation you mentioned. One of the things that I think is so fascinating about what's happening right now regarding the US dollar is that not only are gold and silver going up, but all precious metals are going up. Can you talk a little bit about the dynamics of that, or why is it that all of these different metals are almost at all-time highs now?
Well, obviously, gold, silver, platinum, palladium are regarded as the precious metals, and an
Gotcha.
outside runner perhaps is rhodium too, but I don't think anyone in their right mind would buy rhodium. I think I know the price is probably $50,000 an ounce. I have no idea. So rhodium, you wouldn't be able to find it if you wanted to. So what happens when you've got one precious metal rising? People say, well, perhaps I should own them all. Now, most people don't. Most people say, I'll stick with gold. Then a much smaller number say, well, I'll have a bit of silver as well. And then even smaller number say, I'll have some platinum. And even tiny amount, people say, I'll have palladium. But the fact is, the silver market is a tiny fraction of the gold market, about 1/10 of the size. And the platinum market is about 1/10 of the size of the silver market. So it's getting really, really tiny. So the platinum market is 1/100th of the size of gold. And a very, very tiny amount of buying will have an upwards effect on the price. So even though almost nobody's buying platinum, there's still one or two people who are buying it, and that's pushing up the price. But we have to remember that silver and platinum have a dual use. Unlike gold, silver and platinum have a dual use in industrial demand. I mean, the platinum is used in catalytic converters in cars, and silver is used in electronics, solar panels, defense, and what was the fourth one? That's gone. What are these silver for? Electronics, defense. I don't know, but there's a fourth use of silver, which is using up a lot.
Understood. There's an investor out there. His name is Chamath Palihapitiya. He does a podcast called All In. And at the beginning of the year, he made a prediction that he thinks that copper will be the biggest winner of this year. I'll share a quick screenshot of a tweet that he put out. As we predicted in our annual predictions episode to start the year, unless someone shows up with superconductivity or carbon nanotubes, copper is the only game in town, and AI is a huge demand driver for a very under-resourced material. What are your thoughts on copper and what that could look like in the future?
I've got my little boy
What's
poking his head
up?
at the door there. Okay, so copper. I'm positive on copper. I'm not sure we're going to see the sort of spectacular gains we've seen in gold and silver, but I do think it should go higher over the years which follow. And the reason for that is we have ongoing rollouts of cables, data centers, and that sort of thing. And from what I read, that those kinds of things are going to be consuming incremental copper over and above the standard use of copper, which is always there when you're building roads or railways or whatever else. So it's effectively a new use of copper, and I understand it to be quite large, and therefore the demand for copper should rise, and the price of copper should rise too. But I don't really see the kind of squeeze we're seeing in silver and gold at the moment. I think it's probably, in terms of tons, it's probably a bigger market. Well, it definitely is a bigger market, big time. And there are some copper mountains coming on stream, like in Argentina, in the next couple of years anyway. So the supply probably will go up. So the way I would play this is not really to go buy copper bars. I mean, you need an awful lot of space to store copper bars. You would want to buy the mining companies. There's a number of pure plays, and a number of large mining companies which do multiple things.
Got it. I'd love to hear your thoughts, Clive, on how you see all of this trickling down into Bitcoin, if in any way. Do you see a rotation eventually happening from people who are rushing to buy precious metals?
Humans all go for the same thing at the same time. And well, sometimes you go for everything, but there will be times when one asset class is being chased and the other one kind of gets pushed to one side. And we're seeing that with Bitcoin at the moment. It's being pushed to one side. But these things rotate. There's an awful lot of people who claim that Bitcoin has got no use case. I'm sorry for them that they go public saying that. I think that's extreme ignorance to come out with a statement like that without even looking it up and checking. You could just ask ChatGPT, for example, and you'll find the answer. I mean, it's not like it's hard to find out what the use cases are. And but at the end of the day, there's countless people all around the world who can see a use case for themselves, or a potential use case for themselves, or a parachute, depending which way they look at it. Ranging from people who happen to be friends with a politician, and if that politician gets sanctioned, you find your accounts blocked. There can be all kinds of things go wrong. It could be a battered housewife who can't control her own finances because of her husband. There's endless situations where people would have a personal reason to have something which nobody can take off them, not even if they raid their house and search under their pillow. So at the moment it's out of favor, but the fact is the network of those who will take the Bitcoin off you for something is not going to get smaller. It's the number of people who would give you something in exchange for Bitcoin will go up. I've had one experience personally where there was at a railway station where it was in Switzerland, where someone came up to me and said, "Oh, I heard you talk English. Listen, I really have to buy a train ticket, but I've had my wallet stolen or something. But I can pay you Bitcoin." Okay, so he's honest. So we did a little swap. I don't know, 100 francs or something like that. I didn't mean to do it, but I accidentally made a profit from him because we miscalculated how many Bitcoin. It worked out like I think I got the decimal point wrong in the calculation, so I got a bit too much Bitcoin for the 100 francs or whatever I gave him. But that was accidental. But he was an honest guy. But there was in that particular situation, he found a solution. There was someone on the planet, i.e. the first guy he asked, willing to take Bitcoin.
Mm-hmm. Totally. And I see one comment in the chat, and I'll let you take over, Keith, but it said, and I'm sure it's in line with what you were thinking of when you said that people think it has no use case. So someone said, "I'll say it publicly. Bitcoin is Beanie Babies without the cute, cuddly, stuffed toy you can hug when you feel bad for wasting your money." So when someone comes to you with that hypothesis or thesis, I guess, where they say it has no use case, how do you respond to that?
Well, it's a very tribal thing. People who either love or hate Bitcoin. I'm just sorry, I'm going to start again. There's armies of people who love Bitcoin and hate gold. There's armies of people who love gold and hate Bitcoin. So, and then there's an even bigger army of people who don't care either way, or like them both. I think for the most part, those who like both keep their mouths shut. But anytime someone writes Bitcoin's going to go up, then you'll have an army of haters saying, "You idiot! How can you say that? Just wait till Michael Saylor sells all his Bitcoin and the whole market will crash to zero." And you've probably got a few people saying, "I'm not going to join in this." But if Bitcoin goes to zero, I'm buying every single one of the 21 million out there. And likewise, if someone comes out and says Bitcoin's about to crash, inevitably you'll have someone come in and say, "Don't you get it? This is what's going on, and the institutions are coming in. This is happening, that's happening," and they'll find reasons why it's not going to crash. So it's tribal, totally tribal. So I try not to say too much when someone makes an opinion, because the minute I say something, I'm going to have an army of haters, whatever happens.
No, I think that's probably the right approach, and I think that Bitcoin's one of those things where you wake up to it when you either have an experience where you would see that it definitely has a use case, or you come across someone who it does, and then it clicks. But I don't think you can force that upon someone. So I think that's probably the right perspective. Keith, what else did you have for Clive?
I actually just wanted to pull up a quick little bit of a meme based on the question that you were asking earlier around Bitcoin versus gold.
I think I know the one.
Yeah, people have been this one first, and it's just this guy naive saying, "Have you considered selling your crypto?" Guy says, "No." Sunglasses on. Take your sunglasses off.
He's crying.
And underneath, he's crying.
That's awesome.
I mean, it's obviously a play a little bit on the laser eyes as well, isn't it?
Yes, certainly.
Yep. And then this
you know,
one-
if you on LinkedIn a couple of years ago, I wrote an article which was Bitcoin hit an all-time high, but it's not what you think. Bitcoin by the time was at $16,000 at the time, I think. But the article was about the hash rate reaching an all-time high. Obviously, Bitcoin was down from 40,000 or 60,000 to 16,000. But I did actually say the question towards the end of the article was, should you buy Bitcoin? And the answer was absolutely yes. That was the time when I just started on LinkedIn and I got 4 views. 4 views for my article. Obviously, these days I'm getting tens of thousands, but it's a bit of a shame because I was kind of right, but I didn't get any applause for it.
Totally fair. Go ahead, Keith.
There's one other meme, pretty much well in line with everything. Ben, you sent this, I think. You were right about the dollar collapse. You were right about hyperinflation. You were right about being in assets, but you were wrong about one thing.
It was gold.
I
I had a bunch. I think we're near the bottom for Bitcoin because I had multiple friends send me that who don't like crypto, and so I think that may be a bottom signal. But Clive, do you have any how can I phrase this? Besides Bitcoin, are you a believer that like anything besides Bitcoin is a shit coin, or do you see value and utility in the altcoin market?
I've not seen anything which at the moment, I mean, I'm not really looking at the moment, but I have looked in the past and I've not really seen much which was sufficiently convincing. I mean, I did at one time find an altcoin that I thought was very convincing, but I sold out of it at some point, and today it's worthless anyway. Okay. So just as well. But it did seem to have a very valid and potentially good use case, but as time went on, I realized that it was having trouble getting traction. I got out of it. I think the big one which everyone looks at is XRP. I'm not. I went into it at one point because everyone said they're going to win a court case, and when they win the court case against Gary Gensler, the coin will soar, and that did in fact happen. But I failed to sell when it jumped up, and then it went back, and finally it reached the purchase price. So I thought, okay, I'll be happy to get my money back. I don't know what's happened to it after that, but it was never one I loved, and what I didn't particularly like was 2 things. First of all, in 2017, I did read the white paper of XRP at the time. Now that might have changed since, and if I had understood it correctly at the time, you didn't need huge amounts of XRP to send money around the world. A bank could be sending billions around the world with just $10 worth of Bitcoin, which will last over 20 years. Sorry, $10 worth of XRP, which would last over 20 years. At the time, now, things may have moved on, and Ripple Labs Inc. is, of course, working with many governments, and they've got lots of great projects. So I think Ripple Labs Inc. will probably do very well, and they'll probably get lots of great contracts. But will that translate into a valuable use for XRP, or will it just translate into a use for XRP as opposed to a valuable use for XRP? That I haven't studied enough to determine that would be the case. It certainly wasn't the case in 2017. Whether it's something changed, I don't know. But the other side of the thing is, what irks me a little bit is we're seeing the founders, what's his name, Gary,
got Brad Garlinghouse.
But Garlinghouse, yeah, they've and Ripple Labs Inc. being sellers of Bitcoin over the years, not Bitcoin, sellers of XRP over the years. And I'm asking myself, why? Now, I think the reason is like anybody who's got an awful lot of money in one asset, they probably want to diversify. That makes sense. And I think probably Ripple Labs Inc. sees all this XRP as an opportunity to, over the years, to raise a bit of money here and there to fund their operations while they get to full thing. But it doesn't sit terribly well with me when I see people, on the one hand, telling us how wonderful XRP is going to be, and at the same time, they're selling through the back door. I don't like that.
I think that's very, very fair. And then I think, so one of the other things that we talked a little bit about briefly was the copper situation, and Chamath particularly talking about how he thinks that that's going to be in even higher demand because of the AI build out. Coming back to some of that conversation, what are your thoughts on everything that's happening with artificial intelligence? And do you think that we're in a bubble?
Well, we're seeing a lot of vendor financing. Vendor financing is when you lend money or give money or invest money with somebody who's going to buy your products. Now, that's not illegal. Let's face it. The whole world has been doing that with America for decades. We've been lending America money so they can buy our cheap goods. I don't know why. Okay, tariffs might be a way to stop that, but I mean, the best thing that they could do in America is basically say nobody outside America is allowed to hold any treasuries. That way, you wouldn't be able to borrow any money. You wouldn't be able to buy our goods. But let's just come back to the vendor financing on the AI side. If you're lending money to or investing money in a company which is going to buy your products, that turns into immediate profits and sales, but there's no certainty that the company into which you've put the money will ever make a profit. So you may be creating sales which would, let's say, not have existed but for the vendor financing. And when that investment you've made in that company, because don't forget you put money into the company which buy your goods, when that investment ultimately fails because they went out of business or because they couldn't repay, you've lost your money. So what you've done is create immediate profit at the risk of having a loss much later. You're pushing profits forwards to the current year, boosting your share price, which is wonderful if you happen to be a big shareholder, as many of the top executives are, and you're unloading your shares on the market almost every month. And you obviously want the highest possible share price. The way to get the highest possible share price is to basically boost your sales. And the way you boost your sales is by paying somebody money so they can buy your stuff. Are you with me? Was that too complicated?
I'm with you for the most part.
So the question was, is the bubble going to pop? Well, I think someone needs to do some. I haven't done it, but I think the maths of the AI situation is that there seems to be some sort of cutoff point of what people are willing to pay around the $20 mark. For when we're talking about private individuals like you and I mean, some people can afford a lot more, but it seems they've, all these services you see everywhere. Netflix, it's $20 a month. YouTube, it's $20 a month. AI, ChatGPT is $20 a month. Perplexity is $20 a month. They're all hitting the $20. Somehow someone's done the maths and say people get indigestion at more than that. And I think that's, what's that? Spotify, same thing. So I think where we've got to is there's a price point beyond which sales will start to drop off. So if they raise the price to $50 a month, the overall sales might be lower than at $20 a month. But the trouble with $20 a month is you've got all these people using resources, the electricity and the power, and it's unprofitable. As far as we know, it's unprofitable at the $20 mark. So what do? Raise it to 50 and get less revenue and maybe incur less expenses on the AI front. But the other side of the coin is we've got all these different companies appearing like mushrooms in the night, saying, "Hey, we're doing AI too." I mean, there's hundreds. I mean, we've probably got 10 or 12 big ones that we know, but there's hundreds of them popping up left, right, and center. So, who's going to be the winner? Will it be the big names who've got the most money at the moment, or will it be someone else? We just don't know. So, do I think there's going to be a bubble pop? I don't like to use the word pop, but I think there might be a sort of deflate where it stops rising, it goes down 20 or 30%, and then it has its ups and downs. So it's neither here nor there. But I wouldn't be chasing it too much. I don't see any harm in having some exposure, but I have no exposure, and I don't really feel like doing so at the moment.
No, I think that's completely fair. I think that you made a lot of good points there. I do think that the $20 price level thing is a major issue because even the most people that are paying for that, they're typically power users of the tool, using it all the time, which then makes it even further more expensive for these actual tools themselves. So I think that's a great perspective. And I also think that the amount of fear that's out there from people is being pushed by the people who need this to be the topic of conversation 24/7 to continue this circular financing, to continue the investment. And so perception versus reality is a very tough thing to determine here because there's so few people on the ground floor. Like we've talked about so many times, Keith, where there's like maybe a few dozen people who actually understand what's going on. And so much of it is just we're left into the dark. So thank you for sharing that. Keith, do you have something else?
Yeah, I mean, first off, we've got 731 people in the live chat. Hit that like button and gently tap subscribe if you are enjoying yourself here. Huge pleasure and honor to have you all here with us. But Clive, I wanted to move into what does someone really kind of do about all of these things that are happening right now? I saw this earlier today. It said if you measure the S&P in gold instead of dollars, the US stock market has basically collapsed right now. So for the individual that's watching all of this and they're seeing the price of gold at these astronomical highs, all-time highs, same thing for silver, how do you even get involved with any of that? And in general, where should people be looking to position themselves right now?
Well, first of all, nobody should be doing anything in a big rush. So whatever they decide to do, they should move slowly and then see how they feel. It's all too easy to get excited about a particular asset and then put more than you should have done. You don't realize that at the time because you're greedy and you think this is definitely going to be a winner, and you put far more than you really should be by any sane. If you were talking to a proper advisor, you put far more than sensible, and then guess what? Often, well, I won't say often, but sometimes it doesn't work out, and you regret what you did. So my first advice is whatever you decide to do, whether it be equities or Bitcoin or gold or silver or property or anything else, go in gently in small quantities, take a breather, see how you feel. If it doesn't bug you that the price is moving around, buy a bit more. And it doesn't matter if you're buying at a higher price than you paid or a lower price you paid, because either way, whether you're buying at a higher or lower price than previously, you're guaranteeing yourself that you're not the last fool, because the last fool is the one who paid the highest price ever. But if you bought on more than one occasion, you've got two prices, so your average price cannot be the highest price, and therefore you're guaranteed not to be the last fool. So that would be my first bit of advice. If you don't have any precious metals where you can get your hands on them quickly and easily, I think it's time to start. Go and see what you can buy. Don't care about the price for a little bit because you're buying so little. You shouldn't be caring. If you're buying, let's say, for 1% of your assets or 0.5% of your assets, does it matter that you paid 5 or 10% too much? It doesn't. It doesn't. You're now in the game, and you're able to increase that later. And if prices settle down at a lower level, great. You can buy some more at a lower level. And if they go higher, great. You were a smart one because you were an early bird.
Yeah, I think making the decision, the I am statement, that I am an investor, it takes the conviction to actually start is a big thing. And I think that that's great perspective, especially in an era when everyone is operating on fear 24/7. That dipping your toes in, dollar cost averaging into whatever you decide is the first thing you want to touch is fantastic advice.
One of the things which has worked very well for me I've been buying gold all my life, so it doesn't really matter. But if I talk about equities, when I go into a particular equity, I have a 33% rule. It's on my website, Clive Thompson. It explains how it works. But in simple terms, when you decide to buy a stock, you think about how much you want to own at the end of the day, divide it by 3, and you invest 33% of that end amount in the equity. Then you wait. And you can wait a day, a week, a month, a year, or years. Doesn't matter. You just wait as long as you feel like waiting. And after a few days, the price will be higher or lower. And you can see how you feel about that. And then you can decide whether to wait longer or not. But the good news is, if the price starts accelerating away from you, you might never need to buy those other 2/3, because in 2 years' time, you might have got your full position without having to spend 2/3 of the money, which gives you spare money to buy 2 other things. And if the share price goes down, you can ask yourself, how could I have made a wrong decision? You better go and look and find out what went wrong with your decision making. Were you really, was there something that you didn't see that you should have seen? Because obviously everybody else is seeing it. They're selling the shares. Why? It's a lesson. If it's going up, there's another lesson. I probably got it right because everyone else agrees with me. But if it's going down, that's when you've really got to figure out, is everybody wrong, or am I the one who got it wrong? Because the other people push the price down by selling before you. And you have to find that out. If really everyone else has got it wrong, and you're the only guy who's right, well, great, you can buy your next 1/3, except you get more shares for your next 1/3 than you got for the last 1/3. Mm-hmm. But on the other hand, if you discover what you hadn't discovered before and it's gone down, then you can say, you know what, I can sell it. I only bought 1/3. The loss is so small, it doesn't matter. Whereas if you bought a full position, it kind of hurts to take the loss.
Love it. So you've spent an entire career, from what I understand, in finance and even investing for yourself. How important would you say is managing psychology and your emotions in the game of investing?
Well, I'd like to tell you that those who can master their psychology are the winners. I don't know that that's necessarily proven, because we've seen, all these countless hedge funds come and then shut shop. So we've got a certain survivorship bias here. These hedge funds are the guys who are telling you, I have a track record of seeing the future and controlling, and a disciplined approach and control the future. And then I know this because I've been investing in not me personally, well, a little bit. I've had clients investing in hedge funds all my career, from the late 1990s when they started to exist. But let's go back in time. Some of the biggest geniuses in the world won the Nobel Prize for mathematics or economics. The guys who ran long-term capital management. They nearly took the whole world under. I think it was 1999 or 89. I can't remember now. When the biggest hedge fund in the world collapsed, having to be bailed out by the Federal Reserve to save the banks. Now, these were people who had worked out the perfect discipline where nothing could go wrong with the way their system worked, except something went wrong. We don't know what it was. So discipline, I'm not sure that discipline is. I think the real problem is panic. What you do not want to be is somebody who's panicking every time the price goes in the wrong direction for you. If you buy something and the next day it's down, you say, "Oh my God, I'm not going to look and find out what I did wrong. I'm just going to get out of it because I can't stand this panic. I'm not sleeping at night." Then you're in the situation where you're going to incur a lot of frictional costs as you go in and out, driven by every bit of news. One of the things I tend to do, and to avoid that, because I'm not going to pretend I'm a disciplined investor. I'm going to pretend I'm going to say that I do something differently. When I buy, and I'm talking about stocks here, when I buy a stock, I tend to put it away and forget about it for a year. At least, I'm going to put it another way, I don't watch the day-to-day news. I'm not sitting there looking at my portfolio saying that was gone up. Why did it go down? That went down. Why did it go down? I'm not checking. It would be quite tedious to check, because if I was checking, then I might see a bit of bad news and think, oh, I better sell before everybody else. Except you're never selling before everybody else. And then I see a bit of good news on another one. I think, oh, buy that one. And that starts to create trading. I'm not a trader. And if you trade, the more you trade, the more you're incurring frictional costs, and the harder it becomes to make money.
Very well said. Very well said. For the people that are watching who want to find ways to become a better investor or a better thinker in general, are there any books that you've read that you recommend to anyone?
Well, if you've got the guts for it, get Ben Graham's The Intelligent Investor. It's a very thick tome. You see, you're looking behind yourself. You got it on your shelf, Ben.
Yes, sir.
But I think most people, if they want to get started, can buy a book which would have a name like Beginner's Guide to Investment. Don't buy any of these books which say "Get Rich in Stocks." That's in the Ben Graham's Intelligence. So the books which say "Get Rich in Stocks," they usually have some magical system which they claim works. And the systems there's nothing wrong with the systems. They're all valid, but they're not valid all of the time. They work some of the time, and some of the time they don't. So when you buy one of these books which says "Get Rich Quick," you're going to find in that book there's going to be a magic formula, like buy companies with low PEG ratios, or buy companies with high momentum, or buy value companies, or buy companies where the board of directors are buying the shares. And these are all magic formulas, and there's plenty of them. What I would do is buy a Beginner's Guide to Investment, where they cover the basics, and then you can start to look at the kinds of things you should be looking at, like, is the company making a profit? Do they have a product that people are likely to need the same of or more of in the future? And are they turning that profit into positive cash flow? Because don't forget, profit isn't necessarily cash in the bank. You could buy a ton of steel, and then the price of steel goes up, and you can say you've made a profit. But if you haven't sold it, you can't pay the staff.
Completely.
So that actually also just perfectly led me into something I meant to ask earlier. In one of your videos, you actually brought up the fact that Rick Rule, who is a very popular precious metals investor, has been selling his silver position and rotating into silver miners. And he actually quoted something very similar to what you just said there in making this decision. He was like, paper money is paper money. It's not real. The gains are not yours until you realize them. You touched a little bit on this before, but I wanted to really pick your brain on looking at the miners versus the spot opportunity, or trying to buy physical precious metals of some sort. What do you think about that?
Well, I've spent the last few days in my very small amount of spare time, because I'm quite overwhelmed with questions, but I spent the last few days studying gold and silver miners to see where the price ought to be if the price of gold and silver stands still at the moment. I probably got through no more than 8 to 10 stocks, so it's quite a small sample at this point in time. And my conclusion is that on average, they ought to be about 145% higher than the current price. And that's based on some very, very complicated mathematics. I'm looking at lots of different things where, how much they were producing 12 months ago for the quarter, 12 months ago, how much they're producing for the quarter now, what the price was at the beginning of the quarter, their metal, what it was at the end of the quarter, then what it's now, then what the price was on the day they announced the results, how the share price behaved throughout that period, and how the sales changed with the gold price or silver price, and how the costs changed with the gold and silver price. So it's quite complicated calculation, but at the end of the day, I get to some numbers which tell me that a small number, 1 or 2, might be overpriced at the moment, but across the board, they're very underpriced, and very, very underpriced. I think if the gold and silver prices hold where they are now, we might be looking at share prices of 140% higher in a year and a half, when the impact of these higher earnings comes through. And Rick Rule's got it right. I mean, the important thing to say about him, he is a person who has donkey's years of experience in that sector. He also has a great brain which can work out, just as I am doing, what the future profits will be of various companies. And he's even doing something which I cannot do, which is assessing the value of companies which are not yet producing, but which might produce in the future. Now, that's mathematics I won't even attempt, because I think it's too difficult for me to say what a company might produce. There's too many unknowns. But at least with the producing companies, you've got a fairly good idea. You know how many ounces of gold they produced last year. You know how many they produced this year. You know how many they think they'll produce next year. You can put a price on each of those productions. You can see what their costs were last year, what they are this year, what they which direction of travel they got for the costs. Put a decent estimate of the costs, and you can come out with a gross, or rather gross profit, and then you can knock off some other expenses, like how much they spend on prospecting, marketing, management, and non-mining costs. And you can get to where the bottom line might lie in terms of earnings per share. And then all you have to do is put, now another complicated thing, what multiple do you put on it? I tend to put, to reach my conclusion, I tend to put a low multiple. But if you are in a period of rapidly rising earnings per share, it's more common for high multiples to apply to companies with fast rising earnings per share. But putting a low multiple, I get to much higher share prices than today across the board. So for someone who doesn't know which ones to buy, you could probably just buy an exchange traded fund and you get all of them and you'll do fine.
Amazing. So where do people go to source information to make an investment thesis? Because if you just scroll, let's say a platform like Twitter, where I think a lot of people use that for their investment information, which is definitely a dangerous game. I don't recommend doing that. But where do people go to get like solid information that they can actually use to make decent decisions?
Well, the absolutely amazing thing we've got today is there are countless tools out there, investment tools, available to the man in the street, which give you far more information than ever before in history, and which are very, very hot competition for those expensive tools which you find in financial offices like Reuters and Bloomberg. Those are very expensive tools. But we as private individuals can get almost all of the information we want by paying $20 a month, for example, from lots and lots of different tools. If people would like to look at my channel, clivethompson.com, the very last video I did explained the use of a particular tool, shows how to use it and shows the value of that. But there are other videos there, and you can find out what works for me and what works for other people. But yeah, you got to, in a way, you've got to. And by the way, the tool I'm using is a free tool, free of charge. So it's not like it's going to cost anybody to do that.
That's amazing.
So all you have to do is look around, find a tool which works for you. There's different, some people want very, they're very good with numbers. They like to look at jumbles of numbers and pages and spreadsheets. And other people just want to look at a green blob. And if it's green, they buy it. And if it's yellow, they don't. It's kind of depends on what people are happy with. Are they more picture people, or do they want to read the words? So there's websites which translate these fundamentals into words. There's websites which present the fundamentals in hard numbers, and there's websites which put it into a picture type format. So all you have to do is pick what suits you and go for it.
That's it. I think playing around with different tools, we have access to so many that I think getting your hands on them and using them and playing around with it is such an important thing. And if you guys want to see Clive's channel, it's linked down below. So Keith's popping up on the screen right now. It is the first link in the description box down below. If you've enjoyed this stream, you'll love Clive's content. So go show him some love. And if you want to see the specific video he was referring to, you can go ahead and check that out there.
And then also clivethompson.com.
Sweet.
Yep.
Go check those out. I'll get that added to the description box. That's not there currently, but I'll get it added.
Cool.
And then I think with the last few minutes we have with Clive here, we'll open it up to the chat, and if you have questions, let them fly, and then we'll throw a few at Clive before he gets back to his evening.
Yep. And Clive, growing up in Switzerland, I imagine you grew up speaking a few different languages. You're fully fluent in English. What else you got?
I do speak fluent French, but to be honest with you, it's almost unnecessary. Switzerland is a financial hub, or everybody with a large fortune will have a family office here in Switzerland because you're next to your banks, you're next to the accountants, you're next to the lawyers, and the whole world in the financial world is operating to a large extent in English. So every bank I ever worked for, even though they were Swiss banks sometimes, the last one was Union Bancaire Privée, a Swiss private bank. Everything's in English. You work for my wife works for a French, well-known, a very, very, very large, well-known, reputable French private bank. But English is the sort of the way they communicate, even though it's head office in France. Now, of course, you've got to speak French. But it's kind of like you never send out anything without putting it in English as well.
Makes no sense.
Everybody just naturally goes there. I mean, when I was working, I had clients from France, French clients. They would be heads of industry. The top people in some large French companies. They chose to bank in what we call it the Anglo-Saxon team or the English team. They chose to bank in the English team because their day-to-day language was more often English than anything else. Now, there may have been a secondary issue in that. Maybe perhaps some of them thought the French fisc, the tax police, won't be able to understand what I'm saying on the telephone if I speak English. But that wasn't. I mean, that was obviously not really a valid thing because the Swiss banks are all reporting everybody's income to every country in the world. So but there's still a psychology there.
Of course.
That perhaps nobody understands me in France if I speak English.
That's awesome. We got one question here I'll pop up. Would love to know Clive's thoughts on the Clarity Bill in the US and the reverberation that could be possible, if any, worldwide.
Well, this is a way to preserve the status of the US dollar as the world's reserve currency, because obviously they'd like everybody to start using stable coins, which will effectively be invested into US treasuries, therefore funding the US deficit and possibly kicking the crisis years into the future. And so I understand why they do that. I think it's not a bad plan, but it also paves the way for digital currencies. I mean, it is a digital currency at the end of the day, the central bank digital currencies. And the central bank digital currencies might well be a mechanism which is used to get governments off the hook for their national debt. And the way you do that is a bit like we had in the UK in the 1950s after the war, which was called ration coupons, where you couldn't buy a pound of butter if you didn't have the ration coupon. It didn't matter whether you're a millionaire or not. You had to have the money to pay the butter, but you weren't allowed to buy it without the coupon to go with it. So let's imagine that we get to a situation where the whole economy is starting to operate on some sort of central bank digital currency, and they might pass that law to say we need that to happen so that we can monitor for anti-money laundering, for terrorism, for drug dealing, for criminals, what have you. So now the whole economy's, every transaction, you buy some shares, you buy a house, the money's going to be swept through your bank into your central bank digital wallet, and then for your CBDC wallet into the whatever you're buying. And when money comes into your CBDC wallet, everything above the limit you're allowed in your wallet is swept out back into your bank account, an automatic sweep. That's how it might operate, until one day you wake up and find that you can't sweep money into your digital wallet anymore because there's a crisis. And we don't want all these wicked people going down to the shops and buying up all the toilet rolls or whatever the problem is. So you suddenly find that you're limited to $20,000 or whatever in your digital wallet. You can't have any more, and you can't go out and speculate on foreign currencies or gold or whatever you feel like speculating on, because you can't get any money into your wallet, because it's the sweep into your wallet is now temporarily, because of the crisis, blocked. Except that temporary becomes permanent. So over time, the old currency, which is in your bank, ceases to have any value because you can't spend it. And what does the government owe? The government owes the population the old money. So they can pay you back in the old money as much as they like.
Yeah.
You're never gonna cause any problems because it's no longer affecting the economy in any way, shape, or form, because the whole economy is now operating on a highly digitally controlled single currency, which they can control what happens to it, where it is, what you do with it, who has it, whether they switch it off or on, whether they pay you interest, or whether they don't pay you interest, whether they charge you interest. The whole economy, they can control the economy much, much better with this new digital currency, and on day one, owe absolutely nothing to anybody in the new currency, and the old currency is effectively defunct. Problem solved.
Does this push
there are a few issues around that, but that's a longer discussion.
Certainly, we're simplifying everything for the sake of conversation, but does the push towards this, like what seemingly is a surveillance global state, and obviously one of the biggest tools in that being CBDCs, does that concern you?
Not me, but it concerns me for my children or my grandchildren. On day one, I don't think they'll have too much surveillance, but I think as time marches on, it'll become tougher and more controlling. And so many of the freedoms that people have become used to in the last decades might be taken away or severely restricted.
And do you think there's anything that the public could do to avoid that reality?
I don't think the public is motivated enough. They'd rather sit at home, watch Netflix.
I agree. Yeah, I think that's an unfortunate reality that we're in. Yeah, I think that the more people wake up to that reality, I think the more people will be interested in Bitcoin, crypto, etc. Keith, I think Keith's coming back now, but we've had a lot of good questions in the chat, so I'll throw one or two more up, and then we'll let you get back to your evening, Clive. This has been awesome. I really appreciate you coming on and sharing some of your experiences and perspectives with us.
You're welcome. So just glancing at my diary, just make sure I'm not running up. Yeah, I'm fine. It's fine. I just wanted to make sure I wasn't running out of time for another appointment. I do have sometimes some days as many as 6 consultations with which I've been doing for free of charge. Not Zoom videos like yours, but consultations with people who've got investment financial problems.
Wow.
I'm not taking any more appointments at the moment because I'm booked out through to March.
Wow.
But
wow. What made you decide to do that for free?
Well, I've worked all my life. I earned money. I never had a day when I wasn't working, or at least not being paid. And not everybody is lucky as me. So, I've had my fair share. A lot of people find themselves losing their jobs, and sometimes they're out of work for months, even years. So yeah, I don't see why I have what I need to live on. I don't see why I have to charge people. Doesn't make it would. What's the point?
That's awesome.
It's awesome.
So good. Did you see anything else in the chat, Keith, that you wanted to throw up to Clive?
There was one about whether or not you invest in any collectibles, and I thought that was an interesting question.
That's a great question.
Well, I think it's a great idea to do so. And it depends what your passion is. So I have a personal passion for silver coin collections. Well, one could extend it to gold. So many countries, UK, Australia, Spain, for example, as Canada too, issue coins which have a theme, and they issue one coin a year, like often an animal. So that's as an example, the Perth Mint in Australia, they have what's called the Lunar Collection, which is a collection of 12 zodiac or lunar animals, and each year they'll issue a coin with that animal in various sizes, 1 ounce and more, and other sizes, and it comes out in gold and silver. And when you get to the 12th animal, you've got the complete collection. And then they start again with the 12 animals. So the Australians are now on their third round, or third is called the Lunar Series 3. And what's great fun is you get 1 or 2 of these, then you try and somehow you'll come across another one from the same collection, and you don't care what it costs because it's part of the collection, so you just buy it to be. But where it gets really exciting, when you've got 11 coins out of the 12, and you keep hoping you're going to come across that 12th coin somewhere, And I wouldn't go on eBay or an auction site to buy it at the price. The fun is not going out and saying, you can buy anything on the market. The fun is going and finding it by accident. So walking into a watch shop, say you got any coins or things like that, and sometimes it just lands in your lap by coincidence. You say, wow, that was the one I was missing. I'm so lucky. I'll give you an example. I went into, there was one I was missing for one of the lunar collections. I can't remember which one it was now. I was missing one coin, and I went into Degussa, which is a large gold and silver dealer in Germany, Switzerland, and Europe, and said, have you got anything? And they said, we just got this coin. And I thought, I'm not missing one for my collection. I'm pretty sure I've got that one. So I said, no, I've got it. And then I went home and I checked on my database, and it was the one I was missing. And I rushed back to the shop and said, have you still got it? And luckily, they hadn't sold it. So that was an example. But obviously, some people like whiskey. Now, if you're going to collect whiskey, what you want to collect is the whiskey bottles from distilleries which are defunct, which have gone out of business, because there'll never be any more of them. There'll only be less of them, and there'll always be someone who wants to own a bottle of whiskey from a distillery which went out of business 20, 30 years ago. And of course, whiskey you can keep for literally forever, can't you? It's not going to go stale. But there are people who like dolls or handbags or watches, and just depends on what your personal preferences. And one of the wonderful things you can collect in collectibles is paintings, because you can actually hang them on your wall and admire them. And if you everyone would have their idea. And my idea for paintings, and this is what I try to do, and I say try to do because I'm being very unsuccessful at buying anything, although I've tried. But what I try to do is find a painting where there's an absolutely fantastic, amazing story to go with it. For example, I have one, it's quite a small painting by an artist. He died, I don't know, 150 years ago, but it's a very, very, very detailed painting. And it's some English ladies, young girls, if you like, they're probably in their 20s, sitting in the garden drinking tea, and the house is behind, and a gentleman has arrived who patently is the secret lover of one of the young girls, and the mother has intercepted the gentleman because she's not going to have any of that. Two of the girls are looking at the man, looking at their friend, and giggling because they know what's going on, and the one who is in love with him is looking down at her crochet, pretending she hasn't noticed that he's arrived. And it's a great story as a picture. That's the kind of thing I like, because I like I think a picture's got to tell a story.
I totally agree. Yeah, and we as humans, we have this natural inclination to want to collect, and I think the things that come from that, the connection with people that you know, the introduction to people that you don't, I think there's a lot there. And I'm an avid collector myself, primarily in sports cards, Pokemon cards, and then NFTs. So I get a lot of hate for that on this show, but I definitely enjoy collecting. It's definitely something that I like a lot, and hope to do more of it in the future. But Keith, did you have anything else?
Not too much else from me.
Keith, what do you collect?
Gosh, I really don't collect much, man.
I'm sure you will.
I guess maybe books. I mean, I like to collect books. There's a lot of stuff that I haven't read that sits on my shelf.
Well, actually, now you say that, Keith, I just tell you, I am a collector, but I haven't bought anything for donkey's years of antiquarian books. But my penchant for antiquarian books was only to buy the antiquarian books. These are books of 150, 200 years ago, which could not be reprinted. So there'll be you can always reprint a novel, so there'll be no novels. I buy books which can't be reprinted because their contents are either unacceptable today or because they are so wrong in what they write. So to give you an example, there's a book called Modern Inventions of Our Time from probably 1830 or something, and they talk about the telegraph, which has been laid across the seabed between UK and America. This is one of many things that money modern inventions are, and they're kind of puzzled as why these telegraph keeps getting cut. They don't understand it. Our ships sinking on the telegraph cable or what? But I mean, they found out much later that it was this is not in the book. The icebergs are, because the telegraphs, when they were laid, they didn't have a way of knowing whether they're laying on top of a mountain in the seabed or in a valley. But as they laid the telegraphs, these things would go across the tops of mountains and down to the valleys and across the top of the mountain. And then along comes a massive iceberg, 1 trillion tons, and just slices the telegraph cable in two. They did that. Now, of course, they have techniques to avoid that problem. But what the interesting bit is, they said, and now it's absolutely amazing. It's possible to send as many as 10 messages across from America to Britain. But of course, we'll never need to have that many messages, because there's not that many wars breaking out or something like that.
If only they knew.
10 messages, far more than we'll ever need to send from America to England a day.
Wow,
That's awesome.
super cool.
I love that. Yeah, the recurring thing from everything that I took from that was like the stories and all that. It makes it so much more fun. So that's really cool. I'll have to start getting into book collecting a lot more. That sounds really interesting.
For sure. Yeah, thanks for that, Clive. Thanks for all of it. Is there anything else that you want to make sure that you share with anyone that's here?
Well, anybody who would like to look at my website, clivethompson.com, there's lots of interesting stuff. There's some of my more interesting videos on it. And there's a few resources of ways to invest your money in stocks or whatever. Have a look around. Oh yes, I've got my portfolios from 2023 through to 2026. They're called the Beat the Benchmark portfolio. I publish them every year on LinkedIn at the start of each year. Every single one beat every benchmark every year.
Awesome. Super
So they're portfolios where you've got 40 stocks. Nothing changes from first day of the year to last day of the year, measuring performance every day. If you download the portfolio, it will auto-update in Excel. It's linked to the price feeds. So when you download the Excel spreadsheet, the prices are updating. You can see the value every single day, and you can see how it did in each respective year.
Amazing. I'm going to get that added to the description box of this live. So if you guys refresh your page, the link to Clive's website should be available as well in about 10 seconds. And then you'll be able to access that.
Awesome. Yeah, thanks for doing this, Clive. It's also really cool to hear that you're spending your time from now to March just taking calls with people and helping them out with their situation. That's really inspiring.
It's awesome.
Well, it's very fulfilling, and all I ask in exchange is other people's thanks. If they thank me, that's all I need.
Well, we thank you for sure. I know the chat does tremendously. I've seen so much love for you, Clive, in the chat. So clearly what you're putting out into the universe, you're definitely getting back. And we appreciate you sharing some of that here in a big way.
Thanks very much, chaps. It's been great to meet you, Keith. It's been great to meet you, Ben.
Likewise, Clive. Man. Hope you have a great rest of your evening and enjoy your night. And we hope to speak with you soon.
Cheers. Look forward to it. Bye-bye now.
Cheers.
Cheers,
Bye-bye.
man.
All right.
I can click off, right?
You're good to go, Clive. Thank you so much.
Okay. All right. Bye-bye.
Bye-bye.
Peace.
What a legend.
Wow. That was awesome.
That was great. We'll do a quick debrief with you guys in the chat. Again, if you guys ask questions or that we didn't see, it was not deliberate. Just there's a lot of people in here. So we really appreciate all of you guys coming in and hanging with us. And yeah, I think I love that you doubled down on that, Keith, because I think the biggest takeaway is like, that's the most important thing, right? It's just the integrity behind what you do and looking out for other people. And that does come back to you. And I'm sure that's been a recurring thing throughout Clive's life. And I think that's something that we try to push in the show in a big way too.
Yeah. Like all of the things that I took away from that conversation were definitely very meta. Like it wasn't like the things he's saying about gold and silver and what's going to happen next in the currency devaluation. It's how does he really look at all of this and how does he, like, what are the values that he has through all of the things that he's doing? Because there's something very unique about Clive. It's not just that he understands and knows these things, right? It's the fact that he's taken time to come to the internet and share some of the things that he's known for all this time, right? And you know, how many of us have that wise person in our lives that we can reach out to and ask certain questions to? It's not very often.
No.
So it was very cool that he's doing that, and he's putting himself out here in the world, he also didn't have to come on the pod. You know what I mean? So
totally. Yeah, so definitely go show him some love. Both those links that he mentioned, his channel and his website, are in the description box now if you refresh your page. And yeah, I think one other thing too that's worth reiterating that you just said was that like the variables change, the characters change, but the approach to things is something that's pretty constant through life, business, investing. And so if you can learn these skills, they definitely transfer over. And I also saw a bunch of people in the chat saying that Keith collects knowledge, and then someone else said that they love collecting skills. And I think those are fantastic things. Like that's why collecting is definitely a game where you do need some time or money to be involved in collecting, but collecting skills is a fantastic way to look at life, because really when you see somebody and the success that they have, it's the compounding of skills. And so when you also start acquiring some skills, you see connections across different verticals. It also teaches you what skills may be worth learning. And there's a book that from Stephen Bartlett back there, I forget what it was called. I think it was called like Happy Sexy Millionaire that I read. And he basically talks about how like it's the most successful people are combining a few skills. It's not necessarily the best in anything. It's the ones that understand which ones complement each other to open up doors for yourself.
That's a bold title.
Happy Sexy Millionaire.
Like I'm gonna immediately assume you're talking about yourself.
Yeah, I think he was more making fun of himself for saying that that's what he wanted to be when he started entrepreneurship, and then he is more or less saying a guide that can get you as close to the target as possible.
That's super cool. Super cool. We've got 722 people in here. Listen, that's the most that we've ever had on a live. So if you're here and you're live, I imagine that you're enjoying this. So hit that like button and gently tap the subscribe button, okay? Because it might hit back, all right?
You never know.
So, I mean, there was another reason why I think that part of it was so important, guys, is like the meta of conversing with him is that he's mega successful, right? Like we don't have to ask him about all of that to understand and kind of take that away from the conversation and the way that he's moving through the world. So just wanted to kind of just point that out as why, like, it's a big part of why the meta of that conversation is so important. Or just worth, paying attention to. So what's going on in the chat, everybody? Talk to us. I got a couple of memes that I am willing to share because I think they're funny. So there's this thing that was going on Twitter around like olive oil. Have you guys been seeing that? Have you guys been seeing the olive oil thing that's going on Twitter?
I hadn't. You talked about it before we went live, but this is news to me.
Okay. So here's what I saw that made me say, all right, I need to actually figure out like what is going on, because I keep on seeing this and I don't get it. So I saw this tweet. Clarity meeting concluded, compromised made, said Intuition Analytics with the super chat. Okay, I haven't heard about that just yet, so I'm gonna have to look at that. Give me just a second. So another day being unemployed because you had olive oil as an interest on your resume. And I was like, okay, like, why do I keep seeing this? Like, what exactly is going on? And so by the way, I asked Grok. Okay, so this is a new use case for Grok, all right, because it knows what's going on. It knows what the jokes are for the most part. And it told me that this was the original tweet that this came from. There's this guy that said, cannot stress how much of an advantage it is to be normal, well-adjusted applicant for banking roles. I reviewed a resume that listed olive oil as an interest. That is not an interest. It's been hours and I cannot stop thinking about it. There will not be an interview. And so that got 10 million views on the tweet, 110,000 likes. And so people are just like running away with this idea of like, well, what's wrong with having olive oil on your resume as an interest? And so this guy did a really cool clap back. I think this was pretty good. He said, cannot stress how much of an advantage it is to be normal, a normal, well-adjusted applicant for food industry roles. A friend runs an olive oil factory and an applicant listed the global financial system as an interest. That is not an interest. There will not be an interview.
I love that. That's something that like it's so funny how we care about what other people care about. Like I've never really understood that. And I think that's pretty interesting. I like olive oil. Are you a fan of olive oil, Keith?
I mean, I have nothing against olive oil. I would be I would absolutely be intrigued if someone put that on their resume.
Yeah, I'd be like, what is it about olive oil that you love so much? But I love that, man. Yeah, and I like what you like. And I also think that saying that publicly will attract people like you too. So it's definitely worthwhile doing, even if it's olive oil.
Absolutely, absolutely. And then this one, not super funny, but definitely I think is worth sharing. There might be someone who can resonate with this. Overheard in San Francisco. Person 1 said, Rome wasn't built in a day. Person 2 said, yeah, but they didn't have Claude Code.
That's awesome.
And I could totally see that happening in the tech community.
Yeah. No, Claude Code's pretty fantastic, I will say. And a lot of the tools that are out there, we've talked about, like we build software companies, and I think that it's just never been more approachable for people. So if you have an idea for a website, a web app, or a mobile app, it's definitely worth looking into. From my understanding, Claude Code is a little more geared towards people who kind of know how to code to a degree, but there are some other tools that are purely no code based. So definitely worth playing around with. And they're also getting hyped like crazy. I will also say, watch out for the hype when you get into that world on Twitter. The new greatest tool launches every other day, because what these tools do is they'll go and pay people to promote it. So then if enough people are talking about it, then there's a critical mass of interest around that topic. So then there's a flywheel that gets going because everyone just talks about it because they want the views too.
Love it. One piece of news, looks like Trump came out and said earlier today that he's going to be picking his new Fed chair next week.
Howard and everybody, and then next week, I think sometime, Scott and Howard and everybody, we're going to be announcing the head of the Fed, who that will be. And it'll be a person that will, I think, do a good job. We're paying far too much interest in the Fed. The Fed rate's too high, unacceptably high. We should have the lowest. And I think you read my statement today. I put out a statement before the meeting, but we should have the lowest interest rate anywhere in the world, because a lot of these countries are successful only because of us, because we allow them to have surpluses. And without next.
So we'll see who it is. As I think I've mentioned in the past, Rick Ryder, the guy from BlackRock, is supposed to be potentially the first runner-up.
There's so much of this stuff going on. It's fascinating TV every day. But we got some good questions in the chat based on what I said with the AI stuff, and then I'm sure we'll get more from what you just shared. William, you're not stupid or dumb at all. Claude is a AI tool that's really geared towards programming in particular. It's the one that most developers tend to lean towards and gets talked about very frequently because of that. And then I saw something else that's worth talking about too, because it was the latest spectacle on Twitter within this community, and it was that of ClaudeBot. So it's this, I think they had to change their name, but it was this tool where people were buying Mac Minis and basically setting up their own kind of like AI agent that will basically do whatever you want it to. You could theoretically text it and it would then perform actions for you. My opinions on it is it's definitely overhyped right now, but these things do improve very quickly.
Word. I kept seeing ClaudeBot, wasn't hearing about what it actually had happened. Okay.
Every other day, Keith, there's a new thing. And so if and I've fallen victim to that trap too, because it just creates like this fear thing, because they're all operating on hype cycles, right? So for the people who see the parallels between this and the .com bubble, like they're pretty indisputable, right? Because when there's this much hype changing this fast, and much like Clive had said, that very few of these things, apart from, like, ironically, the people using these tools to build like wrappers have sorted out monetization. They're incredibly profitable, but the underlying technology that's being used, they've not cracked monetization in many ways. So I think that's higher likelihood of a bubble popping, right? Because the actual things they're using are so expensive. But that's also why, what's his name? The guy from All In, he had this viral moment where he's like, do not use
J-Cal.
Yeah, he's like, do not use the OpenAI API. If you're dumb enough to do that, like, you're basically screwing your entire business. That's an important thing to realize too, guys, is that, like, why do these massive companies give you tools for free? Part of it's data extraction, but data extraction from the consumer and also the builder. And so if they, like, this has been a cycle that's been on repeat. Like, even Microsoft, man, like, they were like, oh yeah, build with our tools, build with our tools. And what did they do? They ripped off the best tools. That's why you got Microsoft Excel. That's why you got Microsoft Word. There were products that came before that just got totally ripped off because they could make it within the operating system. So always be cautious of those things if you're a builder, for sure.
Very well said. Someone did bring up in the chat earlier about what's been happening with the Clarity Act or something of that nature, which we've been on here, so we haven't seen this, but it looks like the Senate Agricultural Committee passes Bitcoin and crypto market structure legislation out of the committee. I won't play this because I don't know what's being said, but okay, so we're seeing that that's going on for sure.
The market did not like it, theoretically. Like, in the last 24 hours, Bitcoin's down 6.5% in the last 1 hour, 1%.
Yeah, and people have also been asking like what's going on with the markets. Well, one of the big things that's happened here is that this is earnings season. It's a big earnings week.
True.
Microsoft, Tesla came out yesterday, I think. Big tech companies coming down. So the Nasdaq for sure is reacting to that. Microsoft is down like it's like almost 10% or something maybe on the day. Let me actually check that out for you.
Yeah, we could do more episodes on the business stuff too. Like we don't really touch that as much as we definitely could.
Yeah. And so, yeah, dude, Microsoft's down like 13% basically on the day. So one of the reasons too, because people were kind of confused about that, because Microsoft actually just had an earnings beat. So they actually outperformed what analysts expected for their earnings. But what they also figured out was that basically Microsoft, their cloud division, did not grow as quickly as it had in the previous quarter. Not that it wasn't growing. It just was like 3%, by the way, not as fast as the previous quarter. They want to see the growth continuing to grow. Right.
Of course.
And so that was one half of it. And the other half of it is that their expenditures on the AI stuff is also really high. So that could be a big part of what's happening here. It's like one of those bubble popping kind of moments. Like, is the AI bubble about to pop? Investors not seeing quarter over quarter growth in a specific cloud business was what it was. It's like, okay, well if it's that fragile, then it's worth watching.
Definitely. When we've seen how sensitive the market is to these things, because so much of it is wrapped up in hype and future projections. Like, was it DeepSeek that launched and then the market like plummeted off of that? And also I saw a comment very earlier, but it wasn't really on theme with the conversation, so I didn't pop it up. But someone had said that they think that Google will win this whole AI race. And I think you're probably right, because they have enough other business verticals to maintain and survive a pop. Right. And if you look at like what most of these companies were, like I say this all the time because it's true, business is really about survival. Like, who can weather the storms long enough to be the winner? Because sometimes it's just the last man standing. And that's why when every business I start, I always try to set a floor so that I can be in there and take some punches. And I think that Google's probably the most well positioned for that. It's also why, which one's going public? Is it Anthropic that's trying to go public? Because I believe their founder is like screaming from the mountaintops about how like everyone's going to lose their job in 3 years as Buddy's about to like file for an IPO, is my understanding. Fact check everything, but like understand incentives, and then what they're saying makes a lot more sense.
Yeah. It does look like Anthropic might be planning an IPO as early as 2026. And it has been very interesting to listen to him speak about this stuff. I think his name is Dario or something like that.
But like they have to embellish, man. Like his job is like a professional embellisher. Like, could it all come to fruition? I think all these things probably happen. I think the timelines are probably dramatically exaggerated. It's great TV. I know that because I grew one of the largest AI shows. Like, I knew it was great TV, right? So I don't think it happens as quickly as everyone's thinking, but I think it probably happens.
That's fair, man. Yeah, it's yeah, I see what you're saying now. He's hyping this up into them potentially going public, right? And so,
well, they all need more funding, even if they don't go public, right? So you need to convince the other people that like this is like what we talk about, how not chasing highs, or what Clive had said, like dip your toes in. He's going after they all have to go after the richest people on the planet. And like I told you, I saw the last funding round. I didn't see it personally. I was explained the terms by someone who did contribute to the funding round for OpenAI. And their whole shtick is like, get in or you're screwed, pretty much. That's what these guys are all doing. Right. And so like, could they be right? Obviously. But even if they're completely wrong, they have to say this.
Wow.
How else do you get enough money to keep it going?
Yeah. That's actually fascinating to think about, because when you're at the table, and that's the way that like there's just so many things that are actually happening outside of just what's happening at that negotiating table that will make you believe that when someone says that.
Of course,
you know what I mean?
All the content is basically saying this. And like I said before, it's really important to understand that how few people are close to it. And yeah, we've talked about this too, man. The fact that image generation and video generation is even legal is crazy, dude. Like, that is not a tool. I saw this as a take from someone else had this the other day. And it's something that we've said on the show too. Like, I can't believe that that's just like chill. And with the tools of the internet to amplify the message. Clive gave the example of that false bank story too, right?
Yes.
Insane.
Yeah. Yeah, we're looking at a crazy time with that for sure.
This game's terrifying. Yeah, see that, and I think that this would probably even be manufactured. We've talked about this before too, where like a bubble can oftentimes be manufactured to result in an outcome that people way above our pay grade want, right? So even if the technology comes to fruition, like we saw with the .com stocks, like they dropped like 90+%, a lot of them, most of them. And some of them did become the companies that changed every part of our lives.
Facts.
Right. But first, most of them fell over. Almost all of them fell over, right?
Yeah, 100%. It's another thing towards like the picking of stocks. Everyone wants to pick a stock, pick a winner right now. And I think it's a pretty dangerous thing to be trying to do.
Echo chambers are strong, Keith. Echo chambers are incredibly strong. And super smart people aren't immune to that.
Mm-hmm.
They're not.
Mm-hmm.
They're just not. Especially if it goes this way, they are right and they're winners. That becomes a very powerful groupthink.
No doubt. We've kind of been talking about this a little bit in the VC world, right?
Yeah.
How people can,
Are you
be in those groups and not
are you
see
seeing
outside?
Balaji's tweet? I think I shared it with you about the potential mass exodus of San Fran.
I think you sent it to me, but I don't.
Fascinating concept, and the connection that he made to Detroit, right? Like Detroit is an incredible example, because I'm certain during like when that was Motor City in its full peak and full glory, people couldn't have imagined in a million years that people would leave. And then if you go look at what the aftermath of what Detroit became when all the money left, it was a completely different place for a very, very long time. They've done a lot of work to make it a lot nicer. I've actually been to downtown Detroit. It's significantly nicer than it once was, but dang, did they get hit hard.
Yeah, so here's that tweet. Balaji, who has a podcast called The Network State, he said, Silicon Valley's ultimate exit is here. San Francisco is the new Detroit. Quote, I did not expect every man I spoke with to be considering an exit, and I was actually shocked to find this applied even to the men most historically outspoken about the unique importance of California, end quote. And so...
Well, there's so many things happening at the same time, right? If this bubble were to pop, that part of the world takes the biggest impact to how things are currently going, one. And then they're also trying to enact a lot of tax laws that would impact the rich people quite a bit. Go ahead.
You know what's actually funny about it is that that's actually directly related. Because so this is what Ray Dalio keeps on talking about. The reason he says that AI is in the bubble is because there's a difference between valuation and then the money. So if you implement this asset seizure tax, what can happen is that people will have to pay taxes on unrealized gains. So how are they going to pay those taxes? They're going to have to realize those gains. They're going to have to sell their stocks.
Yes.
And so that could actually be something that would lead to the bubble popping, because where's all that tech money at? A lot of it is still in San Francisco.
Yeah. Oh, so much of it, dude. So much of it. Yeah, that's a great call. Obviously, they do a lot of financial maneuvering into the different countries and things of that nature. But you're right. Like, there's a lot of individual ownership of these things in this place. And I also see some points here that I think is awesome. So AI is the future of mankind. Yeah, I think it will be. I don't think it's as close to its final state as people think that it is or are telling us that it is. And then I also saw this one right here. Like, originality in Hollywood is basically zero. I was talking about this last night with my girlfriend. We watched Harry Potter, and I was like, there's not been a good movie or a show in a very long time. And people have their gripes with Harry Potter. Like, it's still a children's book. But the stories, I will say, that I remember watching were a lot more in depth because we had the attention span for them. And also, when the game changed, these bigger studios, they can't take risk. So what do? So they repeat the same IP and the same stories 4,000 freaking times, and we have to watch the same bullshit. That's why I stopped going to the movies, man. I used to love going to the movies. But I do think that when we do get access to these open source platforms, I think the barrier to entry for game development and movie creation is going to drop dramatically. So I actually think there will be a renaissance of art and of media triggered by this. It'll probably be amidst a depression, like for the economy. But I think we'll get some pretty sweet movies. I also think that there will be a ton of remakes of old games or expansions on old series, because the cost of building a game now is like 1/100th of what it would have been before, like let's say 10, 20 years ago. So I do think that IP may be the only moat for these big companies. So I would definitely, if you have an old video game that you wish there was a number 2 coming out, I would guess that a lot of them will probably have like a 2 or a 3 or a continuation of the series coming soon.
Love it, man. Very, very interesting thoughts there. Anything you're seeing in the chat?
Just a lot of good chats. First of all, we appreciate all you guys being here. And if there's ever guests that you want us to get on in particular or topics that you want us to cover, I brought up the whole business thing because we haven't really talked that much about business, but I'm definitely a business nerd too. So like we can break that stuff down, especially when it comes to software businesses. That's something that I've studied a ton about. So I'm happy to discuss. And also as someone who's building businesses with AI, I'm more than happy to discern between bullshit and reality. Because I also I have a very unique experiences with AI. Like my client was like second or third largest AI podcast on the planet. So we always had these people on there. And then I've been building businesses with AI. So I do know they're crazy, but I also know that people are embellishing things.
Mm-hmm. Love it, man. Yeah, we'll definitely have to dive into all that.
When it comes to AI, guys, if you're thinking about using it, you should definitely dive in and start. And I would say the biggest things that I would say that it's super useful for as an individual is what I always call is the unstuck machine. So a lot of the times, like people weren't willing to push through the grit long enough to get to their desired outcome. It doesn't really exist anymore. All the other places where you used to get stuck, this can help you. And I also think it can help you learn like way faster. And that's where I think it's most valuable for the individual. Because if you can compound these skills that we've talked about, I spent like a decade plus of self-education that I probably could achieve today in under a year. And we've talked about this shit, but people don't like grasp how crazy that is. Right? About how I had to like check 40 different sources to see, is this point valid? Right now you can go source that so much faster.
Just ask chat.
Yeah. And also double check chat because chat's full of shit.
Always.
Yeah. Bro, they just
but that's still 10 times faster, you know what I mean, than going out and finding 8 different
Totally. It expedites it all so much, and also have your own creativity there for sure. But where is it? Someone said, can you get John McAfee on here? Well, if you figure out how to bring people back from the dead, let's do it, man. He could still be alive.
That's true. It's probably where they're coming from.
Yeah.
There's definitely some rumors that he's still out there somewhere. That dude was a madman.
He's freaking awesome, dude.
Have you watched his old stuff? He was a madman too.
Yeah, he's definitely wild, like 110%, but he's a fascinating individual. And someone said a meme coin for our show. We'll never launch a meme coin because I think those are far too extractive. But we are going to launch an NFT project that we'll be giving to our community for a very cheap mint price for anybody interested. I've already got that generated. It's just a matter of time before we launch it. That's on me. Let me add a note. I still haven't made that Google Sheet for people. NFT Google Sheet for anybody interested. And then, but there is some stuff going on. Like I want to have some guys on in the NFT world. There's just one project that I'm invested in, so I won't say it out loud because I don't want people to think I'm like pumping my own bags. But they've found a very creative way for increasing the value of the project through creating kind of like a companion coin. And then like that, I'll send you some information on it, Keith, because the underlying mechanism is like very, very, very interesting in terms of how they took a brand new project and they got it up to nearly a 1 ETH floor in 2025. Like that's crazy.
Wow.
Yeah.
That's super interesting.
Insane.
Heck yeah. I mean, one thing that I know everyone can be doing that would help us out tremendously would be, when you get the second, to go to Spotify, type in memes and markets, press play on one of these episodes because they're going to make you play some of it first, and give us a 5-star review because it helps us so much with the discoverability of the podcast. And if you're like listening on Spotify,
it's the whole thing. And we treat all the audio there with AI. So if you ever want even higher quality audio, that's the place to go get it. And those ratings matter so much. So if you guys can help us out with that, that would mean the world to us. And my goal for, it was supposed to be this month, but I don't think we're going to hit it at this point, was to get 100. So I'll make that the goal for February. But I think we can get there fast.
I think we can too. And then the only other thing that I have on my mind is if you guys want our newsletter, okay, we're giving out a free newsletter. It's totally free right now, memesandmarkets.com, and you can subscribe for free. We're putting out posts usually twice a week. So go and check us out over there if you want written thoughts where we take some time to really think about some of the things that we're seeing in the world.
Yeah, we go quite in depth over there. And I think that's a platform that if you guys don't have an account, I know people are fatigued, like, oh, I got to make another account for these kinds of things. But I do think that's a platform worth creating one for. You're going to find some really cool people that are very thoughtful there, and it avoids a lot of the negative parts of other social media platforms. I saw someone asking, is Keith a voice actor? I don't think he is yet, but he could be.
I have spent time as a voice actor. Technically, it
Let's
wasn't
go.
like an acting role, but I read articles about blockchain for the Blockchain Acceleration Foundation in 2020.
Cool.
And that was really cool. It was actually when I got my first mic, the mic that I started using when I started the channel.
Nice.
So shout out to Cameron Dennis at the Near Foundation.
Let's go,
because
Cameron.
he put me on back in the day. So I have done technically some voice acting.
That's super cool. I love that, dude. I love that. That's awesome. Well, do y'all have anything else in the chat before we wrap up today? I saw a question about, but what if what I listen to is guff? Do I still give a 5-star? Obviously, we would rather you give it a 5-star, but ultimately that's up to you.
What is guff?
I'm assuming that means bad. Guff.
Definitely still give it a 5-star.
Guff meaning slang means nonsense, empty talk, or rude. Guff.
Oh, okay. Yeah, I've never heard that word before.
So I think it's like BS.
Okay.
Derek, we appreciate you showing up, man. Hope you're having a fantastic day.
Yeah, I do make music. And then on the Board of Peace thing, I really don't have too much to say about it. I don't really know too much about it.
Mm-hmm.
I think it's a lot of, political theater here.
Yeah. I've seen a lot of opinions on it, but I haven't done enough research on my own to provide my own opinion. But yeah, I think it's on brand.
Yeah, I mean, it's wild. Let me just say that, right? Yeah. I got nothing. I'm not a geopolitical guy, right? So I don't really have a whole lot of insights on that kind of stuff.
Totally. Yeah. I follow that stuff to a degree, but I try to stay to where I can confirm, right? And for me as someone in North America, I don't want to speak on other things that I don't have enough context on, apart from other people saying some stuff. But I saw a great question here from Matthew. What are y'all plans for the future of Eminem's show? It's a great question, man. We've talked about this at length, Keith and I have, and I think we'll probably expand the output volume over time. So I think we'll probably increase the episodes just because things move so fast. Mm-hmm. So when we can make it make sense, that's something we'll do. Channel memberships will become a thing. Patreon will become a thing in the near future. We're trying to give as much value up front as we possibly can to everyone so that when we do start giving things that you can pay for, people will believe that there's value behind it, and then we'll do everything we can to follow through on that. So we haven't done any ads. We've made like nothing from this show, dude. Yeah. And that's been intentional because we want people to see the point, right? And so I think that now, guys, we're going to get more and more guests, and the world's about to open up for this show in a very big way. So we appreciate the role that all of you guys have played in making this thing special and start, and it's gonna snowball and compound very quickly. When I went to Keith with the idea of this show, like I knew this would happen, but I'm super grateful that you guys helped us in bringing that to life and also convincing Keith that it can happen. Because I think I think at first he was like, I think this guy might be crazy, but yeah.
I mean, it's definitely been a wild ride so far. Literally just getting started here. It's been a few months, and you guys have already, gotten us to this point. I was just talking yesterday about how we just 2 months ago had like 15 people in the live, but we would just keep going and just talk,
It's also so
it's
fun.
a pleasure.
Yeah, it's so fun. And you guys also are such a massive contribution to the content. Carl is a mainstay in the chat. And so Memes and Markets merch, well, we actually have merch being designed as we speak.
You might have something on you now.
Yeah, I do have a mug right here. I think I made the logo a little too small on this guy. Would love to hear your guys' perspectives. Like, do you think something small and subtle like this is good, or would you rather a bigger logo? Let me know. But until we get these to a point where we're really happy with them, we won't give you guys the opportunity to buy. But we are getting some merch made by like a pretty legit designer. So we'll have some stuff coming.
Most definitely. Someone said, Keith looks really familiar. I watched someone who walks around talking to a stick who kind of looks like him.
Could be.
Yeah. Yeah. That guy hasn't been around for quite some time. I don't know what's going on with that.
It's way too cool, bro. How did y'all come up with the name Memes and Markets? I don't know, man.
Y'all Ben is a name genius. Like he'll just come up with something fire. on the spot?
Well, I've been running businesses since I was legit like 7 years old, right? So I've done the first step of starting businesses like hundreds of times. And so I just run through the scenarios over and over again. And so I know the exact steps that I do with every business that I start. So you just train your brain to do things. So like whatever you do a lot, you get good at, guys. That's also very important because if you complain, you get really good at complaining too. Like it goes both ways. But yeah, we were just chatting and I said to Keith, I think it was over Instagram DMs. It was like really, literally in real time. I'm like, yo, we could call it something like memes and markets. And then I checked and then the first thing I do is I go check if the domain is available. And I could not believe that memesandmarkets.com was available. I was like, okay, this is someone handing this to us.
Yeah, man. And I promise y'all, that's how he comes up with names. It's like, well, what if it was something like this? And it's just like the thing right there. On the spot.
I annoy the crap out of Keith with voice notes all the time. So he definitely hears my freaking verbal diarrhea and my stream of consciousness to get towards outcomes. But I've just done it a lot with this stuff. So 7-year-old business mogul, I definitely wouldn't say that. I would say 95% of my businesses have failed. So definitely have had some.
That's the awesome thing about that you were saying. It's like how many starts have you had? You know what I mean? Like fucking
literally
thousands of them. Yeah.
Yeah. Like, honestly, like because of the advent of the internet, so many more. But even until I got to like high school, I had started and failed multiple businesses. And then in high school, I started 5 more. And then in college, I did like 10. And guys, they all failed. Like, I'm not saying I'm some like killer, but I learned little things on every single one of them.
Mm-hmm. Mm-hmm.
Oh, I crushed a lemonade stand. I had a lemonade stand that my mom also sold the best cookies, or she didn't sell them. I sold them. I was like, Mom, people really like your cookies. Like you should make a bunch. And then I had the lemonade stand and her cookies and we made bank on that. So thank you, Mom.
So cool.
Have you guys met in IRL? No, we've never met. How crazy is that?
That's wild, man. For sure.
That's the awesome part about the internet though. I would say like 2 of my, or multiple of my best friends, like I've only like I was friends with them for years before I ever even saw them in person. And I also would say this too, guys, like I'm a huge advocate of the voice note feature, man, because the stream of consciousness allows you to show who you are and not be as filtered. Like, and that's also something that I forgot to send you in one of my spam voice notes, Keith, was that I do think that a problem that AI is going to have is that I think why it's not good at what I do quite yet is partially because it's difficult to source the data of someone's true inner monologue because there's the buffer of saying it out loud to something that they know is being recorded or like typing. Like how people think in their head is almost never how they speak. So like, I think the AI will get really good at what people say out loud, but how close is that to their true inner monologue?
Interesting.
That's something I've been thinking about.
Great show, said JT Coin Rings. Appreciate that, man. We really appreciate that.
Canadians don't F around when it comes to syrup. That's so good. We have, if you guys want some funny stories, like classic Canada stuff, someone did a massive maple syrup heist in Quebec or something like that and stole like millions of dollars worth of syrup. And it's like a Netflix doc, so I definitely recommend watching it. Do y'all send your mom's and grandma's voice memos? Yeah, I do. I send my mom voice notes all the time. That's why like a lot of predictions that I've made. I also said this to Keith the other day. I'm like, I'm so glad that I have someone that will actually save my voice notes because all of my friends and family used to just like let them delete. Because if you let them play and you don't click keep, they go away forever. Yeah. So I've said on this chat this stream multiple times, I'm like, oh, I made this prediction. And then I went back to my mom. I'm like, did you save it? She's like, no. I'm like,
yeah, no, I'm saving them for sure, man. What am I going to say? Oh, so speaking on that, right? I saw this a couple months ago, and it's funny. I actually was able to find this tweet. This guy, Ryan Clark, is one of the best. He's a very well-known and very well-accomplished internet marketer. And he said, there's a 7% chance I will listen to a voice note. And I was so discouraged when I saw that. I was like, dang, like, is that like what it's like as a super busy person, right? Like, are you actually going to be able to have the time to sit down and, listen to a voice note? And then he was like, me looking at a voice memo, like, because it's like, I'm at the barbershop, like, I'm not going to be able to just listen to your voice note right there on the spot. So
no, that's super interesting. But I think the quality of the voice note matters, right? Like, I say that, like, when you and I go back and forth, the subject matter is also incredibly valuable. And I don't know if you could deliver it any other way. I also think about when people are like, oh, how did you develop the ability to speak to people? I've had so much practice as being the voice note guy and podcast guy. Like so many people got shit on. They're like, oh, not everyone needs a podcast. That was a theme that went around on the internet, and everyone's like, oh, cringe this, cringe that. What's more important than having the ability to express your thoughts? I think everyone should have a podcast, even if no one listens. Also because like, I'll constantly go back and like rewatch the podcast to really make sure I understood everything that Keith said, and also to watch myself to see where I screwed up. Right? And almost no one gets the opportunity to see how they're being portrayed. Right? Whereas if you film something or you record something, you can catch yourself being like, oh, maybe I kind of sound like an asshole there. Right? And then in the future, you can avoid doing that. And that's incredibly valuable.
Absolutely love it. Especially in conversation like that, right? That's a very, very good point. You don't get to observe yourself in conversation.
No. And I was thinking about this too. I'm like, how long will they have to do this? Because like the filtration system that I mentioned is there. If you throw a camera or a microphone in someone's face, they're not the same person, like at all, for a long time. I think it's something around like 30-ish episodes, you might start to see who you are. Or if it's with someone that you know really, really well, that can happen too. But I think that's an incredibly valuable thing.
Love it.
We need to Reddit. I've never really became a big Reddit guy. So I wouldn't even know how to properly conduct that kind of community. If there's people in the chat who have been familiar in that, it can be a content goldmine though. Like in terms of how we expand the Memes and Markets brand, I think there's a lot of opportunities to build different content verticals. Like I want to eventually start streaming old video games that I used to play and like try to help people with their problems while doing it. But there's so many different things that we could do with that brand. And yeah, but it's just not something I know very well.
Yeah, I really didn't even realize you could do that. Like I thought, I mean, I know now, I've seen it before where you have like I guess your own subreddit. I don't really know how that works. I had somebody create a Reddit thread about me a few months ago, and that was really funny.
Was it positive?
I was like, I think I made it.
Let's go. That's a big deal.
It's kind of like a Wikipedia. It's like a people's Wikipedia in a way. But no, it was more like, they were like, why is this guy like getting so many subscribers on YouTube? They're like, this guy doesn't have anything, like nothing is special about this. Like, why is he blowing up? I was like,
what the hell? You're special, Keith.
I mean, it was cool because people responded and they were like, I think he's just like
doing his thing.
Yeah, like he's just a genuine person on the internet that people haven't seen like that before.
It's in short supply for sure. But I love, this is what's so great about the internet. Robbie J. Davis says, I love Reddit. And then right after, no, Reddit, LMAO, cesspool, bunch of schizos. We'll definitely have we're going to have a Patreon like we said before. And I think something like a Discord or something may be a thing, but there's so many opportunities. We'll really lean on you guys for what makes sense. But I know how to run a Reddit. Okay. Then Ray, send us a DM on Instagram. Try to explain to us how that whole thing works. And if we feel like it makes sense for the show, then yeah. And if we can have people that can properly help us conduct it, because that's the issue, right? Like Keith's incredibly strapped for time. I'm incredibly strapped for time. So we would love to do more and more, but the show has to grow for that to happen. And then we also to use that growth to then get more people to help us as well. But we appreciate all y'all being in here. Do you have, yeah, Keith's also handsome. That's a fact, bro. Handsome dude right there.
Oh, thanks, guys.
Of course. Well, Keith's camera went out again. So do you want to just call it here, Keith?
That means I'm at 2 batteries. I'm 2 batteries down, y'all. That means I got no reserves. Oh no.
Okay, cool.
Overheated. Just overheated.
Okay, cool.
Yeah, but yeah, man. Thank y'all for being here. This was an incredible episode. I think this is one of my favorite ever episodes.
Well, Clive's just awesome, and it's funny because like last night we had a run-in with someone who was like very much not like Clive, and so it's refreshing to and I'll leave it at that, but like it's so refreshing to see that, because man, I don't care who you are, what you've done, it's about how you treat people, and that's ultimately all that I care about. Like when I meet people that are ultra successful and I'm like, and they end up being a dick, like I instantly lose all respect for them. I don't even care what they achieved in business. I can look at it and say it's objectively impressive, but I don't care to be around you anymore. So I think that's something that you should always carry with you. You also don't know who people will become too, right? Like, so I've shared the same story a bunch of times on here, so I won't repeat it, but like investing in being a good person and then treating other people like that too is very important.
For sure. You don't know who someone will become, and you might not even know what they're doing now if you didn't like try to figure it out.
Yes.
You know, so
no, 100%. Always look into it. Always be curious. I think be curious before you like before you try to condemn someone, be curious about where they're coming from. I think it's always a very helpful thing. And obviously easier said than done, but I think as long as you catch yourself sometimes when you screw up, we all screw up, and it's all about acknowledging that and moving forward.
100%. 100%.
Well, we appreciate all y'all being here. Is today Thursday?
It's Thursday, man.
So we'll be back on Tuesday. Do we have a guest scheduled?
Every Tuesday and Thursday at 12 p.m. Eastern. Dude, I think next week.
I think it's somebody.
One of our big ones.
Yeah, I think he is confirmed, I believe. I spoke to his representation.
Oh, okay. Yeah. Okay, I see who we got. Yep. Cool.
Is it who I think it is? Yeah, cool.
Week.
So, it's definitely tune in. And like Keith has said before, we only ever put live streams on this channel 100% deliberately. So we do have clips if you prefer more bite-sized segments of this stuff. It's just memes and markets clips, but we separate them completely to give you back the power to your notifications. Because I know that people typically don't want to turn on notifications for channels because they get spammed with 4,000 shorts that are just BS. And so we will always safeguard your notifications. So it's definitely worth turning on the notifications on this channel.
Yeah, and if you do want to see me debate Cal Chassis about XRP, that one on the Clips channel is doing pretty good. Yeah.
Sweet. I got more clips to cut from that episode too. And also did we have anybody reach out to us about cutting clips for us?
We kind of have. I've been a little bit behind on that. There's one person who's just been clipping my stuff, but I think it could be good for us too. And then
sweet.
Yeah, there's a few.
These streams are a clip gold mine, dude.
Yeah, for sure.
There's so many good pieces that can be taken from this, because we're also totally willing to share the actual raw footage. So you don't have to pull it from YouTube, because that obviously takes down the quality so much. So yeah, please send us DMs in there. My bad, I haven't looked at that. I haven't had Instagram or Twitter downloaded for a while. So, but we do check those. It's probably the best way to get a hold of them. Keith's dad would be a great guest. I'd be down for that. Would your dad come on the show?
Twice now. That's maybe it's the same person. I'm gonna screenshot so that I know who's saying that.
Would he be
For
down?
sure. Yeah.
That'd be so sick. I would be super down for that. The man, the myth, the legend. But that's it. All right, sweet. Awesome. Well, we appreciate all you guys tuning in. Like we said, make sure to click subscribe. We will be back live on Tuesday with another awesome guest. It's a little more crypto focused, but it's definitely going to be freaking awesome. So we appreciate all of y'all. Let me get my text sorted out here. Oh my goodness. There we go. Anything else, Keith?
Peace and love, everybody. Make today the best day of your life.
Sounds good. Peace, guys. Have a wonderful, wonderful rest of your week and weekend. Bye-bye.